And here are your top stories. The yen gaining on reports that the next Bank of Japan governor will be former board member Kazuo Ueda. Plus, Adidas says it may report a loss of 700 million euros this year after cutting ties with rapper Ye. We'll be watching the stock as markets open. And the UK economy contracts more than expected in December, but narrowly avoids a recession by the narrowest of margins.
Now, Tom, let's take a look at the futures. Of course, it's all about the inverted yield, what that means for futures in the U.S. and what it means here for the possibility of the U.K. withstanding recession, what it means for Europe. So futures actually down a bit, but really the big story is all to do with yen, the possible appointment of a replacement for Governor Croden. And we saw a big shift also in bonds. We
did indeed. We thought it was going to be all about that yield curve inversion, the most pronounced, of course, since the 1980s. But as you say, it's all mixed, or moved, I should say, to the action around Japanese assets. And we'll get onto that for you shortly. Here's the read across, though, in terms of the sell-off, 2 days of sell-off in terms of Wall Street assets, equities at least yesterday, and of course Treasury selling off as well, yields up, and that being reflected across the sovereign debt space here today, particularly around Italian BTP. So I'll get onto Japanese debt shortly. Here in Europe then, Spanish IBEX currently down 0.5%. The FTSE 100 off by 0.2%. Yes, the headline around the fact that we dodge a recession, but for the month of December contracting 0.5% more than estimated. You have to wonder how long we will be able to maintain positive growth. The expectation, of course, from the BOE is that we will slip into recession later this year. Over in France, the CAC current off by 0.3%. Let's switch it on then and have a look at how things are moving across these Japanese assets. We have the futures, of course, in the US, just range bound at this point after the losses of yesterday. It is the focus, of course, on the yen and on JGBs, on the announcement that, or at least reports that a next Bank of Japan governor has now been picked. It is not the deputy governor who had been flagged as the top candidate. It is a very prominent economist, aged 72 years old, very respected within the economics of Japan. Currently, the Japanese yen gaining a full 1 percentage point on expectations. The view within these markets that this nomination, as reported, will be more hawkish than the deputy governor of the BOJ and more hawkish than Kuroda himself. The expectation that that change, of course, will happen in early April. The Japanese 10-year then, 50 basis points. This is then bumping just above that range. This is the yield curve control level. And so markets, again, testing that level on reports of this announcement. We'll keep across, of course, this story and unpack the details just in the next few minutes. 130 on Japanese yen. Brent, $84 a barrel, just taking a bit of a breather, down 0.2% after a pretty solid run-up. Expectations shifting around recession risk, growth risk, and the impact of that demand out of China. Fran.
Tom, let's dig a little deeper into the sectors that are on the move. Out of the 20 sectors that make up the stock 600, actually only 3 are gaining a touch. So they're gaining 0.2%. It's telecoms, food and beverage, and personal care. The ones that are losing the most, so we have retail, basic resources, and technology down between 1 and 1.3%. So this is a picture for yen. As Tom was saying, look, the biggest story today, and this is breaking news that we've had over the last 20 minutes or so, is of course the possible appointment of someone who is even more hawkish than the current governor of the BOJ. So we understand, according to local media reports, that the Japanese Prime Minister will nominate Kazuo Ueda, a professor and former Bank of Japan board member. You can see yen 130.20. Well, 130.22 actually. Now, the Nikkei newspaper and others reporting that, as we were just saying, the Japanese government plans to appoint Kazuo Ueda. So let's get straight to our reporter on the ground who's been following this very closely. He's Kazunori Takada, and he joins us now from Tokyo. So, Kazunori, how much of a surprise is this?
Very surprising. He was not on the list of possible candidates floated around the media. And I think this name caught the market also by surprise as well.
What do we know then about Kazuo Ueda? He's 72 years old, got his PhD from MIT. What do we know about his views, particularly when it comes to inflation?
So he served as one of the board members on the Bank of Japan from 1998 to 2005. That was when the BOJ for the first time embarked on negative rates and quantitative easing. So he was a board member then when the bank took those actions. He's also known for voting against lifting of negative rates back when he was on the board, which the bank eventually did. The government at the time officially requested the Bank of Japan not do that. But as I said, the Bank of Japan went ahead and did it, and Ueda at the time voted against it. Most recently, he's been quoted in local media as saying that any sort of premature exit from its current policy would be risky, noting that how the central bank has said that it would keep rates unchanged until inflation reaches 2%, steadies around around or above 2%, and that the bank should not sort of fret just because inflation rates tick up temporarily.
Kazunori, quickly, can you just tell us about the process? I mean, is this almost a done deal? We know that the front runner, also Mr. Amamiya, we understand through local reports that he said no to the job. So how likely is it that, Mr. Kishida gets it?
At this point in time, Nikkei was the first one to report it, but all the other Japanese media have followed, which seems to suggest that this does look like the proposal that the name that the government will submit to Parliament next week.
Okay, so we're expecting, of course, Kuroda's term ending on April the 8th. We'll wait to see if we can confirm this Nikkei report. Of course, it is moving the markets in Japan significantly. The yen rallying on the back of this news. And again, expectations that this nominee, Kazuo Ueda, will be slightly more hawkish than the current BOJ governor, Mr. Kuroda. So you're currently looking at Japanese yen 129 now, 129.94, just below 130 handle that we saw earlier. That's a gain of 1.3% for the yen. And again, in terms of JGBs, just pushing up back against that yield curve control level of 50 basis points, challenging again the markets, the yield curve control policy. Yen is currently bid on the back of this news. We don't have a lot of recent thoughts from this very esteemed economist then, who Nikkei says has been flagged as the next potential BOJ governor. So it's a process of going back through some of his previous works. Yes, he was on the board, of course, of the BOJ back in the 1990s, got his PhD from MIT, but expectations, at least for the markets now, that this would be a more hawkish tilt. And of course, questions about how long yield curve control is going to survive with this new nominee, if again, this becomes confirmed. Bloomberg's Kazunori Takada joining us out of Nikkei, out of Japan, and Tokyo, I should say, as Nikkei's been reporting this news, with the latest update. So that's how assets are moving. Let's get you up to speed now on what is happening.
Very shortly, Tom, something that I wanted to jump in. I mean, I know that he warned about, the GPIF's holdings of Japanese bonds. This was a decade ago. So I understand that the market wants to know more and is at the margins really surprised because it's just a name that we weren't expecting. But I think through the next coming days, we'll have a bit more of an idea of what he stands for and maybe why he was picked.
And that's the point. Yeah, he made these comments and this analysis about a decade ago. So that freshness in terms of his thinking in current economic condition, we don't have it, and that's going to be really essential.
Coming up, we'll also, of course, continue on the story. We'll take a look at what the BOJ news means for investors. That's coming up next, and this is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to the Open. We are 10 minutes into the European trading day, 8:10 here in London. Happy Friday. The markets across Europe currently down 0.6%. You're range bound on the S&P E-minis, but the news is really all about what is happening in Japanese assets. The yen continues to rally on the back of reports that a new BOJ governor has been lined up, and it is not the deputy governor. And the market interpretation is that this is a slightly more hawkish governor who will be stepping in. Again, according to reports, 129.95 on Japanese yen, rallying more than 1.2%. Fran.
So to unpack a little bit about what we've heard so far, joining us now from Tokyo is Kazuo Moma, Mitsuho Research Institute executive economist and former BOJ assistant governor. Thank you for joining us. Mr. Moma, can you tell us, first of all, of the market reaction? Is it because they were surprised, or the fact that actually Mr. Amamiya did not take the job means that there's really loggerhead between the government and the BOJ, the possible next government, about what to do in Japan?
Well, I'm not so familiar with the market reaction because probably the first reaction of the market is the knee-jerk reaction to whatever the name, which is different from Mr. Amamiya. But Mr. Ueda has been generally dovish when he was with the BOJ when 1998 to 2003. He actually opposed the raise of interest rate at the time of 2000 when BOJ actually decided to raise interest rate from zero to positive territory. So I think his philosophy about monetary policy, his very wide knowledge and also the experience in the BOJ, I think supports the monetary policy in Japan will be constructively navigated by him.
Do we have a sense, Kazuo, of how Mr. Ueda's thinking has evolved from the time when he was a policy member at the BOJ back in the 90s?
Well, of course, it was a long time ago. And last time he was with the BOJ was 2003. Since then, already almost 20 years. But at the same time, he has been following what happened to the BOJ and monetary policy all the while. He actually joined frequently the conference held by the BOJ, international conference and academic conference, and also the price development conference, so on and so forth. So I think he is very familiar with what has been happening to the BOJ for the last 20 years. At the same time, he still will be able to provide some fresh view to the BOJ's monetary policy because he was not deeply involved in what happened to BOJ in the very accommodative monetary policy for the 10 years. I think this will provide a good balance between the fresh eyes and also the deep knowledge about what is the BOJ is all about.
Do you think that if he does become actually Bank of Japan governor, he will be much more dovish, so that we're going to see market swings the other way as market get over their initial knee-jerk reaction?
Well, I mean, the situation in the BOJ is really, really difficult right now. First of all, BOJ actually now observing the first sign of the possibility that they will be achieved 2% inflation at last. But at the same time, it's still very challenging for the BOJ to complete its job. So I think the very delicate balance and very good communication will be necessary going forward. And I think our market will probably understand how good communicator Mr. Ueda is to the domestic market as well as the foreign market. So I think his communication capability will provide some kind of stability to the market going forward.
Yeah, the importance of the ability to communicate about some of these potential changes. So the time frame we're looking at then is Mr. Kuroda is expected to be replaced on April the 8th. Correct me if I'm wrong on that. What is the expectation? What is your view then in terms of how long yield curve control lasts? Does it end this year?
Well, I don't think so. I know that many people are expecting that yield curve control will be abandoned sometime this year because the market dysfunction problem still lingers. And also many, particularly foreign investors, are looking for higher interest rate, responding to the higher inflation rate and wage inflation going forward. But at the same time, as I mentioned, it's very still challenging for the BOJ to complete its job in terms of 2% inflation target. So I think being patient in terms of the raising interest rate and also abandoning YCC will be agenda for Mr. Ueda when he is the governor. So I think we have to be a little bit more patient about what might happen to the BOJ's policy this year.
Thank you so much for all of your insight. Of course, someone who knows some of the people involved, Kazuo Moma, Mitsuho Research Institute executive economist. So we look at yen, we look at, of course, the impact this also could have globally. Yep. And joining us now is William Davies, Columbia Threadneedle's Global Chief Investment Officer. What a day to come on, William. I mean, this is not dull. We have, a new name, not as dovish as markets were expecting. And the markets are kind of freaking out at the margins.
Francine, you're absolutely right. This is a surprise. But we have to remember right now that we don't actually know who will be the next Bank of Japan governor. This is conjecture. But I think we have to look in terms of the markets at that snap reaction because we don't know Ueda-san particularly well. But if we go back, there is a perception that he will be more hawkish, and hence we've seen that rally in the yen. And look what happened over the past few months as we've seen the rally in the yen from the high 140s to 130 or so right now against the dollar. We've seen the outperformance of financials within the Japanese market. If we see a continuation of that perception that the Bank of Japan is going to be more hawkish, the yen will strengthen. We'd expect to see more of that as we move forward.
William, do you want more clarity before you take a position on Japanese assets, or are you making moves?
It's conjecture right now. It's so difficult to know. And also the point which was made before as well, Ueda-san, we look back over the years, maybe some of his voting policy or whatever, how do we know it's going to be exactly the same right now? We would need to hear more from him about exactly what policies may be. So to take positions right now on the back of this is quite risky because it's conjecture.
But, I guess I think you're right. It is conjecture, and we need to kind of see exactly what his policies are. I think the market is worried, or at least doesn't really know how to interpret the fact that Mr. Amamiya didn't take the job, so that there could be quite a lot of tension between him, and we know his views, and the Prime Minister. That's fair, right?
Absolutely right. However, you look at that situation where there may be that tension, that can lead to some instability in terms of policy and disagreement. If Ueda-san were to come in and there is agreement, that would lend greater certainty as long as we find out exactly what his stance is as we move forward. So we're in that really difficult period at the moment. We don't really know what has gone on, what is going on. We have the Nikkei report, but it's still to be confirmed.
I was speaking to a source at a major EM hedge fund a couple of weeks ago. They said, look, shorting JGBs is the easiest trade there is. Do you not jump on that? I mean, yield curve control is going to have to end at some point. If it doesn't end this year, it's in its waning days, would be the argument.
I totally agree that yield curve control with the 10-year in Japan at 0.5% or so, and yields elsewhere so much higher. Yes, you would expect potentially without that yield curve control that you would see the bond market come off. But it's not in the Japanese interest, given the huge amount of debt within the country, to suddenly give a free, I shouldn't say bet, free positions in terms of shorting that. So be careful about jumping to conclusions right now.
Is that same thing for the inverted yield curve? Are we jumping to conclusions? I keep on being told, look, it's different this time because of the cheap monetary policy we had over the last 10 years. Is it though, given these levels?
The inverted yield curve in Japan? Or
no, in the US.
In the US, yeah, fine. Jumping around there.
The end of the world.
Yeah, absolutely. Well, if we look at the inverted yield curve in the US, it has been a predictor of recession previously. We are in a slightly strange environment now, in that we're coming from a zero interest rate policy for for a number of years. The increases we've seen in the Fed funds rate over the last year of, well, it's approaching 5% right now, is pretty much unprecedented in terms of the speed and the magnitude of that move. In a way, what is happening recently, looking at the long end of the curve and the rally that we've seen in the long end of the curve in the US, is kind of saying, do you know what? Inflation may be high, but actually, we believe that it will come down over a period of time. And it was very interesting listening to Powell last week in his Q&A, because what Jay Powell effectively was saying is the market isn't necessarily agreeing with our dot plot, but do you know what? I don't mind it too much, because if they're right, they actually believe we've got inflation under control, and rather than being behind the curve, we're actually maybe I shouldn't say in front of the curve, but certainly in a better position than they were a year ago.
William, you've been very game doing all things Japan for us before moving to the US, particularly given the proximity of the news breaking. So really appreciate it. Thank you for your insights. That is William Davies, Columbia Threadneedle's Global CIO. Right, coming up, Adidas shares have plunged in the aftermath of the fallout with rapper formerly known as Kanye West. We get more on that next. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Welcome back to the Open. We are 23 minutes into the European trading day. You can see what's happening across the benchmark then. Losses 0.5%, 2 straight days of losses in the US. But futures now, stateside, S&P E-minis just range brown. We had some UK data out pointing to the fact that we just dodged a recession, but it is yield curve inversion, the most pronounced since the 1980s, that is sending a bit of a warning signal to these equity markets. Fran.
Now, shares in Adidas have plunged after the German sportswear maker said it may report an operating loss of 700 million euros this year. This comes as the company deals with the fallout from cutting ties with rapper Ye. Now, Bloomberg's Ollie Crook joins us with the very latest. Ollie, good morning. Talk us through the potential impact.
Good morning, Francine. Yeah, it's remarkable the impact that these relationships can have for companies like Adidas. We're talking about an operating loss of up to $700 million this year if they have to write off all of the inventory that they had from that relationship. This was a very crucial relationship for them. They called it one of the most successful of these kinds of partnerships in the history of their industry. And so now they have a new CEO. What I thought was more interesting, that apart from the operating loss, if you look at how much this is worth to them in revenue, 1.2 billion euros for 2023. That's how much lost revenue they might have as a result of this. And if you take a step back, this relationship obviously is a major problem, but also they've had headwinds from exiting Russia, also headwinds in China. And this would be their 4th profit warning since July. It'd be their first operating loss in over 30 years. And the new CEO was pretty candid in his assessment. He said that we need to pick up the pieces and put them back together, and that will take some time. It's seen in the stock this morning, but it's also seen in the stock over time. If you look at the spread between Nike and Adidas market cap, right before at the beginning of the pandemic, there were about $60 billion separating these two companies. Today, it's over $160 billion.
Wow, $100 billion difference. That is big indeed. In terms of the stock market today, down at least on Adidas, 8.5% on the back of this news. Bloomberg's Oliver Crook with the latest on the travails that continue for that clothing and sports brand company. Thank you very much. Right, coming up, UK's December GDP figures came out worse than expected. One of the latest UK news. I'm checking on the FTSE 100 right now. You're currently down by 0.2%, off 18 points, 7,892. The focus, of course, beyond the UK is in Japan, where the yen continues to rally on the back of reports that a new BOJ governor has been tapped on the shoulder. That appointment will take place on April the 8th. The yen is currently at 130. That is a gain of little over 1%. JGB's also pushing at that 50 basis level in terms of the 10-year on yield curve control. The market expectation that this appointment of Kazuo Ueda, if confirmed, will be slightly more hawkish for the BOJ. Plenty more coming up. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. The yen gains on reports that the next Bank of Japan governor will be the former board member, Kazuo Ueda. Adidas says it may report a loss of 700 million euros this year after cutting ties with rapper Ye. The stock plunged as much as 11% at the open. And the UK economy contracts more than expected in December, but avoids a recession by the narrowest of margins. Tom, what are you looking at in the markets?
Fran, obviously we are zeroed in on what is happening in terms of asset prices in Japan, but here in Europe you're seeing losses of 0.5%. Of course, the handoff from Wall Street, and then some very strong selling, particularly in Chinese tech stocks listed in Hong Kong, just adding to that negative view as we close the week out. Down 0.5% across the benchmark. There's some interesting moves happening in energy, and I'll break that down for you shortly with the Russian play in focus. The DAX is currently down 49 points, off by 0.3%. The FTSE 100, 7,890, down 0.3%, just slightly supported by the strength that's coming through in energy. But of course, we did manage to dodge a recession, but the data for the month of December coming in sharply lower than the estimates, down 0.5%, suggesting that it's not going to be long before we are officially in recession here in the UK. Let's switch it over and see how things are working out across these sectors then. So Brent oil, WTI up on the reports coming out just in the last few minutes that Russia is planning to cut its output from March by about 500,000 barrels a day. Russia saying that they will not comply with any Western price cap. So that's supporting oil, that's feeding through to the energy sector, gaining 0.4%, the best performing sector in the session today. At the bottom of the list, you have consumer products. Technology also lower by around 0.9%. Of course, you saw yields higher yesterday. That yield curve inversion between 2s and 10s, most pronounced since the 1980s. A bit of a sell-off then that you're seeing in sovereign debt here in Europe as part of that catch-up play. Francine.
Now, Tom, the UK economy shrank by 0.5% on the month in December. Fourth quarter GDP, meanwhile, was unchanged from the previous quarter, meaning the country narrowly avoided a recession at the end of last year. Joining us now is Anna McDonald, fund manager at Amati Global Investors. Anna, what does that mean for your investments in the UK? They narrowly avoid a recession, but actually the situation is very complex, but valuations are quite cheap.
Exactly. We think that we've seen contraction in production, we've seen contraction in services as well. And I think quite a lot of that was anticipated because we saw train strikes and health strikes in December that did lead to some of those issues in December. So how this translates into our stocks, it really has depended on how well analysts anticipated these slowdowns. We saw that for several retail names in the UK, for example, they were severely downgraded in terms of earnings expectations over the last year. So actually, there's been a bit of a bounce this year as things perhaps haven't been quite as bad as feared. And yes, we have narrowly avoided a recession for that fourth quarter, but it's really just squeaked in. And we do anticipate some further weakness coming into this year.
So, Anna, given your expertise in all things small caps, map the economic picture then, the weakness we're seeing in terms of the macro landscape for the UK, onto what's happening with small caps. They were crushed, of course, January to October of last year, down about 25% for the FTSE 250. Come back a bit, of course, post-October, but still down about 8% over the last 12 months. Is there a turnaround at play here?
There could be. Well, you've got to think about the difference in the construction of those, what makes up those indices. And the FTSE, as you know, is heavily weighted to those mining, those oil stocks. And actually, it was the top 10 stocks in the FTSE that saved the market, the FTSE last year. It made it come out with a positive performance because we had really good performance out of Shell and we had good performance out of the mining stocks and so on. The FTSE 250 and below, much more exposed to those domestic names, and they were pretty well savaged. In fact, small cap was pretty hurt throughout the world. So given that we've seen the UK market as a whole look cheaper than global indices, and small cap in itself looked cheaper as well, that means that we are seeing some really compelling valuations. There's been a lot of outflows from the UK market as well. We're hoping that that will start to stem. We think that lots of corporate strategic buyers are coming into the market and private equity. We've seen that already. And now we see perhaps a slightly more stable picture in terms of interest rate expectations. We've left the chaos of Truss and Kwasi Kwarteng's budget behind. With that kind of stabilization and improving interest rate picture, we think that perhaps those buyers start to come back into the market.
But Anna, how difficult is it to actually call bottom for the market? So when do you potentially really start investing in the UK market?
Well, I'm a small cap investor that fully invests in the UK market. So we have tried to, over the last couple of years, we've reshaped the portfolio to try and get out some of those longer duration techie names and some of those more better valued names. I would highlight things like OSB, One Savings Bank, as it used to be called. We're looking for some counter-cyclical stock exposure like Begbie's Trainer, the insolvency practitioner. We look for some UK names which have overseas earnings potential, such as Accesso and Craneware, those kind of names that we see are fairly solid. And we think you can call the bottom there. We think that those valuations are looking really compelling. And that's where we start to see value.
So that's a valuation call, but it's also an expectation that maybe PE comes and plays a more active role, Anna. In terms of the big caps then, FTSE 100, do you move in there as well? Do you think the rally, we're back, continue to push through records? Yeah, we're taking a bit of a dip today, but the FTSE 100 remains at record highs. Does that theme of last year continue to support FTSE 100?
I think that, well, it's difficult. I think one of the reasons that the FTSE 100 performed so well last year was not only the composition in terms of oil and mining stocks, but it was also, there's a lot of dollar earners there. We do think, and this is actually supportive of the small cap as well, that if the dollar starts to weaken, which it already has against the pound, we do start seeing value coming into the domestic names. So the FTSE 100 is not an area in which we specifically play, but we do think that it's obviously an interesting counterbalance to the kind of exposures that we see in small cap.
And is there something actually in the UK market that that you're really wary of? I don't know whether it's some kind of crypto linked or part of the market that still just does not look cheap enough.
I think actually most sectors have been pretty significantly derated. Where we do worry is actually when it comes to, and this is across the market, is that some analysts still haven't properly reflected what we've seen in terms of interest rate cost increases. So for the companies that have got significant levels of gross debt, so we've seen some analysts still have to play catch up on that. And actually, a lot of them still have to reflect the tax increases that are coming through come April. So I think that there are, whilst you can see some quite good news or perhaps less bad news than feared in some of the more cyclical names, sometimes that is completely counterbalanced by the fact that analysts haven't really kept up with the changes further down the P&L than we've seen just on the revenue and cost line.
Okay, Anna McDonald, fund manager at Amati Global Investors, joining us out of Edinburgh. Thank you very much indeed on the valuation opportunities within UK small caps. Let's check in on the oil markets now, because in the last few minutes, we have had lines from the oil minister over in Russia saying that they do plan to cut output by 500,000 barrels per day, and saying they will not comply with Western price caps. You're looking at Brent then rallying 1.8% now, above $86 a barrel for Brent, $79 a barrel for WTI. That's a gain of 1.7%. So again, on the back of the news that the Russians will be cutting production by 500,000 barrels a day from March. Right, let's check in on some of the individual stocks on the move. Of course, Standard Chartered was a big mover for us yesterday on the back of Bloomberg reporting that First Abu Dhabi Bank was reviving plans to make a bid for this lender. They have now come out, FAB, and said they are not evaluating a possible offer for Standard Chartered. So taking a bit of a knock, down 5% on the back of that news. Enel, this was a beat in terms of its earnings, the stock gaining 2%. Analysts saying that net debt is reassuringly in line for that energy producer. And Adidas slumping 9%. Ollie Crook on the ground in Berlin giving us an update on what is happening with this company as it takes a €700 million hit as a result of ending its partnership and branding deal with the rapper Ye. Francine.
Now, coming up, we're joined by Ola Stefnashnyna, the Ukrainian Deputy Prime Minister for Europe and Euro-Atlantic integration. That interview is next, and this is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority. Season is here.
Consumers cautious in the UK.
Are we being overly optimistic?
The pain in earnings has not come yet.
Bloomberg breaks the numbers first.
Forecasting a double-digit decline in revenue.
On the back of record sales.
With exclusive expert analysis.
This year feels so different.
As economies move into slowdowns, earnings are likely to come off.
They're going to be really closely watched.
The important point is the strength of the core franchises.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open. We are 43 minutes into the European trading day. The benchmark European stocks index currently down 0.6%, but a bit of turnaround in terms of the futures for the US. S&P E-minis up 0.1%. Energy, that sector is gaining. Brent is up, WTI up strongly, more than 1% on back of news that Russia is considering an output cut. And of course, the yen rallying on back of reports that a new BOJ governor has been picked to take over from Governor Kuroda.
Now, Ukrainian officials say Russia has targeted the country with fresh missile strikes overnight. Moscow also launched drone attacks on Ukraine's central southern regions. The renewed attacks come just as Ukrainian President Volodymyr Zelensky finishes a tour of the UK and Europe. Now, speaking exclusively to Bloomberg, President Zelensky's chief diplomatic advisor called for more weapons.
We have to be prepared that by the end of February, March, or even further, they might try to make a revenge. That's why we should be more prepared than a year ago.
Well, we're delighted to now join Olga Stefanishina, Ukraine's Deputy Prime Minister, joining us live from Brussels. Deputy Prime Minister, thank you for joining us here in Europe. Partly is to ask for weapons. A lot of it is also to make sure that the accelerated membership in the EU goes ahead as planned. Are you confident with the progress you've made so far?
Well, thank you so much. Indeed, it's very important that yesterday President managed to have the meeting with all 27 leaders and address the European Council with a message of urgency in terms of accelerating military assistance, supporting the peace plan and the peace summit, because just in the morning today, starting from the nighttime and in the morning today, we have already had 3 massive waves of shelling, which covered nearly all the territory of Ukraine, including 1,000 eastern part of Ukraine, Zaporizhia, and objects near the electricity and nuclear power plant. So the consequences of the outreach of the president are seen already now. So we've been calling on the urgency, saying that Russia is preparing a new waves of these aggressive actions against Ukraine on our territory, getting know that on 24th of February, there will be anniversary, let's say, of a year of the full-scale invasion. So it's not the forecast, it's the reality that we face right now. And shortly after addressing the leaders, we can see the confirmation of the aggressive actions of the Russian Federation.
Well, within that context, given that context, is the EU doing enough at this moment to support Ukraine?
It is doing definitely enough to help us survive economically and to ensure the proper management and the running of the country in times of war. I mean, the financial, the recovery assistance, humanitarian assistance, supporting our people being in European Union in the amount of 6.5 million approximately. But of course, bilaterally, the outreach on more weapons and military assistance is needed. This was the target of the discussion. This was the call on the members of the European Parliament. This was the major issue of discussion on all the bilaterals and outreach at the European Council. So more military assistance is needed, but the major thing is that we need it now. We do not have to have this 2 months time lag because it will be crucial for Ukraine's victory.
But Deputy Prime Minister, there is also Ukraine wants to join the EU as a bloc. There are 7 preconditions that you need to fulfill. What do you think is the hardest of those preconditions? And the EU is also saying that, look, there's not really a fast-track option at this point. Are you disappointed?
Disappointment is not something which could be identified for Ukrainian people. We fight and we reach our goals. I think 2 major elements over the meetings and the discussion yesterday. Enormous progress has been marked from all the European colleagues on the reforms agenda in cases related to the fight against corruption, drastic fight against corruption, the rule of law, and stepping up all the judicial transformation. I think this is the major thing which was important at this stage. For us, it is essential to start the negotiation process already this year, while the war is still going, because we have fully operational government, parliament, 90+% of full support of population for European integration. And when the war is over and the victory is there, we want to step up with the decisions, but not with the process, which does not mean that we're trying to skip sort of an element of that.
So you're clear, you want to start negotiations this year. Does that mean then you expect to fulfill those 7 preconditions before that start of negotiations? Do you expect that to happen in the next few months?
Absolutely. Absolutely. I will spend the whole day today working with various branches of European Commission on the next steps to be taken on all the 7 political reforms which we are delivering on right now. And there is no doubt that this will be the case by the end of the year, which will enable leaders to take the decision to start the negotiations.
What are the toughest outstanding issues? And Deputy Prime Minister, what has the EU said so far, particularly on corruption?
On the anti-corruption, I think that we are very closely to, let's say, completing the whole process related to setting the institutions, the legal framework, and all the appointments and the legal amendments we have managed to do so far over this half a year has led to enormous transformation and an insignificant track record in corruption cases, perpetrating corrupted officials and bringing cases to the court. This has been a huge wave and a massive wave of cases identified in Ukraine because the infrastructure of anti-corruption institutions is working, law enforcement is working, courts are working, and it has unconditionally been recognized over yesterday's discussion. It is seen, it is known, and it is considered as a huge, huge breakthrough in all the efforts we've been doing over the years before.
And at the start of this conversation, you talked about that desperate need for military hardware, the clock ticking down potentially to another Russian offensive. What signals are you getting from NATO about potential membership?
Well, we are reinforcing, let's say, our engagement with NATO as there is a comprehensive assistance package and non-lethal support at the level of the organization. Although, as we're talking about the war as the matter of survival of our country as such, first and foremost, we concentrate on something which helps us to survive, and it is bilateral military support provided by allies, by United States, resources mobilized by European Union. But of course, we understand that speaking about NATO membership is not that much about related to this war. It's about preventing any other act of aggression on European continent, and it is essential. So over the Vilnius summit, which will take place this year in Vilnius, it's essential that the member states of the NATO, the allies, say that they will find the way to invite Ukraine to NATO, because that's the matter of their survival as well.
Olga Stefanishina, Ukraine's Deputy Prime Minister for Europe and Euro-Atlantic integration, thank you very much for your time this morning. We appreciate it. Coming up, reports that the long-awaited news of Haruhiko Kuroda's successor has finally arrived. We're going to have the details for you, plus how markets are reacting. That is next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Now, the Nikkei newspaper and others reporting that the Japanese government plans to appoint Kazuo Ueda as the Bank of Japan's next governor. Yen is, of course, higher on the report, and then we have to also look at a couple of other things, the inverted yield curve in the U.S. and then what's going on with oil. But on Japan and the yen, let's get straight to Bloomberg's Kazunori Takada, who joins us from Tokyo. Kazunori, this is definitely a surprise, but is it knee-jerk reaction in the markets because it was such a surprise, and they don't exactly know at this point what the relationship between the Bank of Japan and the government is?
I think you're right. I think the Kishida, the prime minister, has said that he would not surprise the markets, but Ueda's name had not been floated as among one of the candidates. And I think, and hence you're seeing what might appear to be a slightly sort of a divergent market reaction with the yen rising and the bonds easing back a bit, trying to figure out where Ueda stands on policy.
So what do we know about Ueda, and why did Amamiya turn this job down?
So Ueda served as a board member at the Bank of Japan from 1998 to 2005. That was the period when the Bank of Japan first dove into the zero interest rate policy. He was also one of those who opposed to lifting of the zero rates, which was something that the government had officially requested that they don't raise it. The Bank of Japan did go ahead and raise rates, and which was seen to sort of be the reason for why the BOJ was reluctant in easing in the following cycle. Most recently, he has been quoted in media as saying that the BOJ needs to be careful in lifting rates because of his strong commitment to making sure inflation steadies at above 2%, and that it should not really fret over sporadic jumps in inflation.
Kazunori Takada, thank you for the update on what is certainly the story of the hour. We appreciate those insights. Another important story for us, certainly for the oil markets, is what is happening out of Russia. They have announced that they are going to cut by 500,000 barrels per day from March in retaliation for Western price caps. And you can see Brent soaring 2.5%, $86 a barrel. WTI above $80 a barrel, 2.5% gain. We'll see if this holds. The expectation, of course, from the likes of Goldman Sachs is you're going to see oil above $100 a barrel in the second half. This would seem to reinforce that view. Plenty more coming up. This is Bloomberg.
We have only 8% of the ocean protected today. And our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least, 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The yen surges on reports that the Bank of Japan will nominate former member of the policy board, Kazuo Ueda, to replace Governor Kuroda, who's due to step down in the spring. Well, Adidas shares tumble after the company also warns it may report a loss of 700 million euros this year after cutting ties with rapper EU. And the UK economy contracts more than expected in December, but does avoid a recession by the narrowest of margins. Now, first thing is first, let's check in on the markets. I have to say, it's all about the yen. This was the big surprise. We also need to look at oil. Oil is a big one after we saw from Russia that they will actually take some barrels off the market. That sent actually crude up 2.5% at $80 yen. Now, this is where a lot of the action happened earlier this morning. This really came as a surprise to the markets by the fact that there was a possible appointment. This was reported by the Nikkei by someone who, well, A, is not who was expected, but also because the deputy governor is, we think, not interested in the job, it could really point to a huge fight between the government and the Bank of Japan. That Japanese 10-year yield, 0.502. We did hear from our Martin Cudmore saying, look, this is just a knee-jerk reaction right now, so let's wait for the next couple of days to really see what happens. But for the moment, and we have a great live blog, which I urge everyone to go and see it. It's both on the Bloomberg terminal, but also on the website. There have been various reports that we're also trying to get confirmed. And for the moment, yen still climbing. So the Nikkei and others reporting that that Japan is set to nominate Kazuo Ueda as BOJ governor. The yen, as we were just saying, climbing on the news, suggesting that investors see the choice as hawkish. Well, the BOJ governor, Mr. Kuroda, set to leave in April after the longest stint at the helm of the central bank in its 140-year history. Well, joining us now is Guy Foster. He's chief strategist at Bruin Dolphin, and Bloomberg's currency and rate strategist, Ven Ram. So thank you both for joining us. Ven, what's your reaction to this? So I don't know whether the market is worried about the policy of some of that we haven't really heard for the last 10 years. So we want to figure out what it means if he does become appointment, or they worry about this fight between the government and the BOJ.
Morning, Francine. I don't think that the markets are concerned about the fight between the government and the BOJ, because it looks like the way I'm seeing it all play out is the way I'm going to say it now, is that they first floated a trial balloon last week, as we know, about Ambami taking the role, and the market's reaction wasn't so good. It wasn't positive in terms of the yen, and the government didn't want that. And so they went to Ueda, who is more seen as a pragmatic person, at any rate, much more hawkish than Amamiya, and therefore Ueda is getting the role from the looks of it. He seems to be the right candidate for the moment, balancing short-term needs and long-term concerns for Japan's economy.
So, Guy, what's your take on this? When you look at some of the complexities over this, is it a knee-jerk reaction, or as Ven says, this is the right path for possibly just a different way forward for the Bank of Japan?
I don't know if we can place too much importance in the exact person who's going to lead at this stage, because until someone takes the role, you don't really know what kind of stance they're going to take. I mean, we've seen that particularly with some of the members of the MPC, like Catherine Mann was expected to be a very dovish member. She's ended up being the most hawkish on the committee. So, in the context of the BOJ, I think if you look at the background here, we've got inflation looking like it's beginning to meet the BOJ's goals at a time when the BOJ itself is saying that it's not going to be sustainable. If that's the BOJ's impression, then they're effectively saying that Kuroda's policies after this very long stint in power have effectively failed. And we know they're causing a lot of disruption to the JGB market. So ultimately, they need to withdraw from this policy.
And you're absolutely right, Guy, that we need to wait and see a little bit. But to also Ven's very good point, the fact that there's a deputy governor, right, Mr. Amamiya, who we think, or whose reported refusal to take the top job, is that what markets are focusing on?
Well, I think they're focusing on the fact that he hasn't taken the job, and therefore this story that earlier that we had the continuity candidate who was going to be taking the role, that looks to be wrong. The reasons, whether it's wrong as you report, perhaps he's turned it down. But honestly, I don't feel able to comment on that with any certainty right at the moment. But yes, the market's reaction definitely here is that anyone other than the deputy governor is going to be a more hawkish candidate, and that's what's driving the yen at the moment.
Ven, I mean, is it different when you could have, for example, a very staunch inflation wariness, but then when you're in the top job, you look at things differently. How do people change when they become either, in charge of central banks or on the governing council member?
Absolutely, Francine. I do think that there's going to be plenty of pressure on Ueda as he takes on this role, and I think that he will be acutely aware that, having been a BOJ board member himself, and he knows that Japan has been in secular stagnation, and now we've got this bout of inflation. So I think he will be acutely aware that he needs to manage not just the short-term needs, but also the long-term concerns and the troubles that Japan has faced with in reviving inflation, secular inflation, I mean. And I think what we know about him at this stage is that he is against this negative interest rate policy. Is possibly, I mean, given his comments, it's hard to tell, but it looks like he may be against curve control as well. So, but he's not going to go extreme and start raising rates in a hurry. But though I do think that all possible indications of that there is going to be a change in policy at some point.
So then you believe that basically low rates and that yield curve control policy are definitely under pressure, no matter who takes charge at this point?
Yes, I definitely think so, and that is what we see in the end reaction. Because if BOJ scraps curve control, it's becoming a completely dysfunctional market, the JGB market. I mean, the BOJ is there like 80% presence. I mean, and that they can't be buying these defending the curve control when there is so much speculation, and when there is so much speculation to push the curve higher, the BOJ has to willy-nilly let go of the curve control.
And you agree with that, Guy, right? That this is where we're headed, no matter who's in charge.
That's absolutely right. And I think, this is a surprise announcement. Whatever the reasons behind the surprise, we're in a phase with the Bank of Japan now where everything has to be a surprise. It was a surprise when they widened yield curve control before, and I think they would very much like to be able to abolish it or widen it further before too much speculative pressure starts forcing them to make larger purchases. as we've seen around previous BOJ meetings.
I want to ask you both actually about inflation generally, but Guy, specifically about the fact that Russia has said that it will cut oil output by 500,000 barrels a day, really in response to the Western price cap. So this is retaliation. Does that meaningfully change what you're expecting the price of oil to do over the medium term?
I mean, because we don't really make a point estimate for oil, I mean, we're bullish on oil, mainly around the China reopening. I think this contributes to what is already a pretty good setup for oil and pretty good setup for oil-producing companies.
Van, very quickly, what's your take on, importing inflation from China coupled with this higher price for oil?
Definitely, Francine. I do think that points to short-term inflationary pressures in Japan for the time being, and that will in turn impose greater pressure on the new BOJ dispensation to do something with the curve control. And that means that real rate differentials will narrow in favor of the yen against the dollar, and that will put the wind in the sails of the yen.
All right, thank you both for joining us. Ruan Dolphin, Chief Strategist Guy Foster, and Bloomberg's Currency and Rate Strategist Ven Ram. Coming up, more headaches for the Adani Group after MSCI cuts the weighting of some of its companies. We'll have all of the details next, and this is Bloomberg.
CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, MSCI has cut the weighting of 4 Adani companies in its indices after reviewing the number of shares it considers freely available. Now, the move triggered a further sell-off of Adani stocks, which have shed value following a report from short seller Heidenberg last month. Well, joining us now is Abhishek Vishnoi, Bloomberg senior reporter on our Asian equities team. Abhishek, thank you for joining us. So, how would MSCI's action actually impact Adani Group?
Well, it's an index provider, probably world's most famous, most tracked index provider. And it is tracked by trillions of dollars of investment. So whoever is following those indexes watches closely what is going in, what is coming out of the index, where the weighting is rising, where is the weighting falling. So given that the free float outlook or assessment has been cut by MSCI for 4 of Adani Group's key companies, it's likely to lead to a conclusion that their weighting would reduce as and when the moves become effective at the end of this month. And that would, by design, means passive outflows. Now, the estimated outflows, from based on our reporting, range between $400 million to $570 million from those 4 firms. But it in a way also increases the probability of many of Adani Group's companies being kicked out of MSCI in the next quarterly or semi-annual review. Now, this was just the passive side. The number may look small, but keep in mind the active investors would position before these changes become effective. So this actually is worsening the sell-off for the group.
So tell me a little bit about why are some of the bonds getting interest from investors? Like, when is that likely to happen with equities?
Yeah, it's not been happening that fast for equities, but on the bond side, we have seen firms like, based on our reporting, Oaktree and Davidson Kemper, coming in and buying some of the bonds because a lot of them had fallen into distressed territory. There was value emerging. Sell side, including names like Goldman Sachs, were pretty excited about the value that bonds offer. And in terms of hierarchy, bond holders, debt holders come in before equity holders. And therefore, there was some value on the table that these guys, positioned for. And all this is happening in context of, some of the group's companies, Adani Group's family actually repaying some loans, pledging that they would reduce their debt-equity ratios. More such news would definitely evoke similar sentiment in stocks, I'm told.
Thank you so much. Bloomberg's Abhishek Vishnoi there with the very latest on, of course, Adani. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Thousands of aid workers are pouring into Turkey and Syria, where deaths from Monday's massive earthquakes have now risen past 20,000. Turkish President Erdogan is facing mounting criticism over the country's poor construction record and his government's response to the disaster. In Syria, the first UN aid shipment has arrived, loaded with blankets, hygiene products, and also materials to give people temporary shelter. Now, Ukrainian officials say Russia has targeted the country with fresh missile strikes overnight, hitting Kharkiv in the northeast as well as central southern regions. The renewed attacks come just as Ukraine's President Volodymyr Zelensky finishes a tour of Europe. Speaking exclusively to Bloomberg, President Zelensky's chief diplomatic advisor called for more weapons.
We have to be prepared that by the end of February, March, or even further, they might try to make a revanche. That's why we should be more prepared than a year ago.
And British billionaire Jim Ratcliffe is said to have lined up banks, including Goldman Sachs, to finance a bid to buy Manchester United. A source says the lenders are prepared to fund a takeover offer for the English football club with both bonds and loans, including covering Man United's existing $800 million of debt. Shares in the company did surge this week on reports Qatari investors are also circling. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Coming up, the UK narrowly avoids recession 2022, but the economy still has not recovered to pre-pandemic levels. So we'll break down the latest data next, and this is Bloomberg. what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
The UK economy shrank by 0.5% on the month in December, leaving fourth quarter GDP unchanged from the previous quarter, rising 0.4% year-on-year, matching estimates. Now, for more on all of this, we're joined by Bloomberg's Lizzie Burden. So, Lizzie, break down the data for us. We skirted a recession, so we're not in recession, but actually it's a little bit worse than expected.
Yeah, just narrowly dodging a technical recession. Even though you had strikes weighing on growth in December, now the question really is, are we going to have fully averted a recession or have we just delayed it? And if you look at the Bank of England's forecasts, they say that we are going to have a recession, but it'll be shorter and shallower than expected. NISA, though, the National Institute for Economic and Social Research, says there won't be a recession, but either way, the margin really is razor thin. So we heard from the Bank of England chief economist Hugh Hill yesterday at the Treasury Select Committee. He says that in any case, the economy is going to bob around the zero level. So that just perpetuates the challenge for Jeremy Hunt, the choice between higher taxes or lower spending. And in response to the figures this morning, he said that the UK is the fastest growing G7 economy, which is an ironic stat to point to, because if you really look at it, the UK is the only G7 country still below pre-pandemic levels.
So how does this data actually impact the political argument over growth?
I mean, it's a choice between stagnation and recession. So the push for growth is going to continue as we head towards the March budget and beyond. Yeah. You've got Liz Truss, the former Prime Minister, pushing for growth, trying to make the case to be the face of that argument, but also the CBI, Britain's biggest lobby group, business lobby group, saying that tax breaks for business will be the difference between recession and growth. Labour Party pushing for it as well. Really, Francine, I think the elephant in the room here is Brexit. Bloomberg Economics, as you know, has said that the cost of Brexit is £100 billion a year, costing 4% of the economy since we departed from the European Union. And it's a hit to the labour market, it's also a hit to business investment.
Lizzie, thanks so much. Lizzie Burden there with the very late. And of course, on the political front, the UK Labour Party's momentum does seem to be building also with this win in Lancashire. Now, the former chief executive officer of Aston Martin says the UK must drastically increase production of electric vehicles or risk losing its manufacturing capability. Well, Bloomberg's Louise Moon has the story.
If the future is electric, then the UK needs to put the pedal to the metal. 70 years ago, Britain was the world's second biggest car manufacturing base, but has now slipped to 18th place. Falling production of combustion engines hasn't been met by an equal drive towards electrification.
We're losing that pivot. We're losing out to competition in Japan, in China, in Europe, and in the US, and it's a real problem. And we're staring into the abyss there is a real risk that we'll lose our manufacturing capability.
It adds to a bleak overall picture for the auto industry. Figures show car manufacturing's contribution to the UK economy fell to 14 billion in 2021, and car output slumped last year to the lowest since 1956. Adding to the headwinds are Brexit-induced red tape, a lack of workers, global chip shortages, and soaring energy costs. But there have been some glimmers of hope as chip supplies improve and industry giants pile in some cash. The sector, however, needs a strong boost if it wants to get out of first gear.
Bloomberg's Louise Moon reporting there. Now, a couple of things that we need to watch out for. Brent jumping as Russia's planning to cut some of the production of oil, about 500,000 barrels. What this means also for the UK economy is something that we'll be covering every Thursday when we talk all things UK, 9:30 a.m. in our half an hour special. Now, let's check in on some of the stocks that are also on the move. We start with Standard Chartered. This is a UK bank, very skewed towards, of course, Asia, but something that we need to keep a very, very close eye on. Standard Chartered coming out, and this is on the back of expectations that someone would come in there and actually make a move on it. This is FAB, and they have said that they will not do so. So at Standard Chartered, it's through our own reporting, although they have said they would not do that openly. The other story we're watching out for is what Oliver Crook was telling us, and this is Adidas. Adidas slumping as the chief executive is mapping out the worst case scenario for Yeezy. The German sneaker brand really said the worst case scenario is if it has to write off all existing Yeezy inventory, so the stock fell as much as 11% on the back of it. And then we, of course, look at Enel. This is a giant in electricity based in Italy, but really widely accepted as one of the most transformative electricity brands, going away from dirty fuel to some of the electrification. Enel in today's trading session gaining some 3.2%. A couple of other stories we need to watch out for. We've been talking about almost nothing else all day, and this is the Bank of Japan with yen. This is the picture so far. So we've had some smart commentary from across the board. Yen gaining. We need to, first of all, take this with a pinch of salt. Look, there are reports saying that an academic, Kazuo Ueda, will be nominated as BOJ chief. It's a surprise. The Nikkei is reporting that he is the favorite after Mr. Amamiya declined. So what that means for yen longer term is something that we need to, I guess, take a deep breath and try and reopen that. Coming up, we have more on the Bank of Japan, and we ask ourselves why Ueda can be painted as a hawk relative to the non-stop money printing machine that the BOJ has become. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The yen surges on reports the Bank of Japan will nominate former member of the policy board Kazuo Ueda to replace Governor Kuroda, who is due to step down in the spring. Adidas shares tumble after the company warns it may report a loss of 700 million euros this year after cutting ties with rapper Ye. And the UK economy contracts more than expected in December, but avoids a recession by the narrowest of margins. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. The Nikkei newspaper and others are reporting that the Japanese government plans to appoint Kazuo Ueda as the Bank of Japan's next governor. Now, the yen higher on the reports. Earlier today, we asked some of our guests for their reaction.
Probably the first reaction of the market is the knee-jerk reaction to whatever the name, which is different from Mr. Amamiya. But Mr. Ueda has been generally dovish when he was with the BOJ when 1998 to 2003. He actually opposed the raise of interest rate at the time of 2000 when BOJ actually decided to raise interest rate from 0 to positive territory.
There is a perception that he will be more hawkish, and hence we've seen that rally in the yen. And look what happened over the past few months as we've seen the rally in the yen from the high 140s to 130 or so right now against the dollar.
This will provide a good balance between the fresh eyes and also the deep knowledge about what is the BOJ is all about.
To take positions right now on the back of this is quite risky because it's conjecture.
Well, we're now joined by Nick Smith, Japan strategist with CLSA Securities. Nick, thank you for joining us. What are we looking at? Why is the market so surprised by this?
What we have is complete shambles. So there were 9 names on my list. I think the top of the list were Amamiya, Yamaguchi, Nakaso. We knew from the end of last year that all of them were cautious about taking on the job. We knew that they regarded it as something of a poison chalice. The Nikkei on Monday said it's pretty much a done deal, that it's Amamiya. We'd started to get comfortable with that idea, and now we hear that he's turned it down. We knew last week that Nakaso had taken a job with Apex, so quite possibly he'd turned it down as well. So initially we got some concerns and saying, well, it looks as if no one wants to particularly do the job, and then we're ending up with what is a compromise candidate of, for the first time in its 100+ years history, we've got the BOJ talking about having a university professor as the governor.
I know, but it seems, and we had this at the MPC and the Bank of England, like you come in the job and actually you look at the facts and maybe you change. From people that know him, Mr. Ueda seems a little bit, seems quite like a pragmatist. So is the market reaction overdone? Again, I understand that anyone but Amamiya would have been seen as a hawk.
I think that's certainly the case, that Amamiya was seen as a more of the same kind of guy, which may have been a little unfair to him, and then anybody else would be a hawk by comparison. You go through the literature of what he said in English and what he said in Japanese seem to be a little bit different, and he's had quite a range of things. So yes, I suppose the nice way of putting that is to say that he's a pragmatist. I think it's possible to say, as a university Professor, he's more likely to be able to think out of the box.
Yeah, I mean, I remember when Jay Powell was appointed, it was like the lawyer. I mean, we do tend to kind of overreact very quickly and trying to, like, you know, see inside the brains of these economists. Okay, Mr. Kazuo Ueda is actually, I think, talking to Nikkei, saying that it's important to keep the BOJ easing for now. Are we going to interpret, are you interpreting, Nick, like, you know, word by word now to see what he will do as Bank of Japan governor if he gets appointed, or do we just need cooler heads for the moment?
I think the chances are that the people are cautious about doing this job because it's so difficult to do. At the end of a person's career, they're worried about their legacy, and it's very hard to do this. So even more so than the US or the Bank of England, here is a country with debt to GDP of about 260%. It's already bought, I'd calculate, about 56% of the JGB market. Its holdings are what, 105% of GDP. So this is going to be hard to handle. My guess is that the BOJ is in an unsustainable position, and whoever, even if it were Amamiya, that it would be forced to, or end up allowing rates to drift up a little bit, because basically since the beginning of December, it has bought 43.3 trillion yen in bonds. That's 7.8% of GDP. An enormous amount of buying just to hold the YCC ceiling.
I have to correct myself because I said this was the Nikkei, but actually comes from NHK, which is, of course, the Japanese public broadcaster. Nick, this is the very latest on Mr. Ueda saying it's important to keep the BOJ easing for now. If you look at what role does the Prime Minister play in this, is the market, again, really focused on this interplay between what the Prime Minister wants and the fact that the Deputy Governor has said no to the job?
Yeah, I mean, as I said in a report last night, as we learned from the philosopher Mick Jagger, you don't always get what you want. And I think the Prime Minister, you've got to remember, he's from the fourth largest faction in the LDP. So I think Ueda has criticised Kurodanomics at a number of points. He may not be the person that the biggest factions want. They want someone who's a lot more dovish than this. So we may find that we have a lot of market volatility on Monday, and when it comes to a vote in Parliament, that the other factions are not supporting this. So it looks absolutely shambolic at the moment.
I mean, I would love, Mick Jagger, I'm sure, also has a Euro-Yen call, so we need to get him on the phone. What's your take on how much volatility we'll have until we actually have someone locked and loaded, like appointed by the government?
Well, there's been talk of whoever it is that they would do a study at the Bank of Japan into the risks and rewards of the policies that they've already had in place. So I think we're going to have volatility for quite a while we work out exactly what we've got here. And with a less known character there, I think that a lot of traders are going to be taking liberties with the market and try to see how far they can push the Bank of Japan. So volatility on currency markets, on equities, and on the bond market.
Nick, thanks so much. Nick Smith, CLSA Securities Japan strategist, with the very latest on yen. Now, oil also gaining. That's after Russia's deputy prime minister said Moscow plans to cut its oil production in March by 500,000 barrels a day in response to the Western price cap. Well, joining us now as well, Kennedy, Bloomberg's senior executive editor for energy and commodities. Well, thank you so much for joining us. My first question is actually, we're seeing about a 2% rise for the price of oil. It was rising before this announcement. So does this have to do with the 500,000 barrels being cut, or is it just a general market sentiment?
Well, oil had a slightly better week. I think people are optimistic about the demand outlook, but yes, I think this morning the announcement did clearly boost price and add to the gains we'd already seen this week, and it jumped a little bit.
A very good question for Ardan Tillis. Why was this not priced in? They had said they would retaliate.
Well, they've been saying it for some time, but they had never put any details on it and they'd never followed through. I think people were wondering whether it was an empty threat or exactly what they would do. This is the first time that they've actually put some meat on the bones of these threats, and 500,000 barrels a day, about 0.5% of global oil supply, is a significant intervention.
It is significant. I don't know whether it points to the strength of the Russian economy and whether we can make up for those lost barrels elsewhere.
Well, the interesting question, I think, is how voluntary this cut really is. Clearly, they're going to paint it as a positive choice of retaliation against Western sanctions. But the important thing to understand about the market right now is that we had, on February the 5th, Europe stopping the import of oil products, and that was a huge source of petroleum demand for the Russian oil system. And all that diesel, which was coming out of Russian refineries and going into the European system, isn't happening anymore, and there's a danger that they can't place that elsewhere, and that will back up the refining system. So I think there are some people in the market who will tell you that they had to do this because sanctions are now beginning to be so strong that it's hard for Russia to place all its barrels. And Novak hinted at that in his statement, because he said, we will not sell our oil under the price cap regime. So it is perhaps forced on Russia to some extent.
All right, well, thank you so much. Will Kennedy, of course, who oversees all of our coverage for oil and commodities. Coming up, South Africa's president declares a state of disaster over power outages in an attempt to stem the growing tide of rolling blackouts. We'll have plenty more on that story next, and this is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. South Africa has declared a state of disaster over the country's ongoing energy crisis. The declaration means essential services like hospitals and water treatment plants may be exempt from power blackouts. We spoke exclusively to South Africa's Minister for Public Enterprises.
Within 12 to 18 months, we must see the end of load shedding, and it'll happen in two principal ways. One, by adding more megawatts to the system, and many of the renewable projects will be coming online during that period, later this year and into next year. And secondly, making sure that the existing plant works a lot more efficiently.
We're now joined by Yale University Senior Fellow and former Goldman Sachs Chief Executive for Sub-Saharan Africa, Colin Coleman. Colin, thank you for joining us. What does a state of disaster mean for South Africa right now?
Well, thanks very much, Francine, for having me. Look, South Africa is in a three-way interdependent crisis, which is low economic growth, failing infrastructure, in particular the load shedding and energy crisis, and rising organized crime, failing policing. So I think the president acknowledged this in his State of the Nation last night. And this declaration of an emergency is really an indication of the severity of the crisis and the need for a very rapid response. We all hope that Minister Gordon is correct with his 12 to 18-month forecast, but South Africans are a little bit tired, of the ongoing collapse of energy, the load shedding, and so on, and its dramatic effect on the economy. So the president has made some announcements. I think effectively what we need, and there's no quick fixes to it, is we need a combined economic stimulus to get economic growth going. That will only really be revealed in the Minister of Finance's budget speech in about 10 days' time. We need to get a stabilization of this power situation, energy, ports and rail, and this will certainly help bring about focus, manage the load shedding, avoid knock-on impacts on strategic services like hospitals and so on, which is helped by this state of emergency. And we also absolutely need to strengthen the state capacity to manage the situation.
But so, Colin, how would you say so far the government has handled these crises?
Well, it's been underwhelming, I would say. The situation has deteriorated significantly. There is not sufficient lockstep interaction between the different spheres of government. And we've had to see, unfortunately, the Eskom CEO, I regarded highly, Andre de Ruyter, resign, and a new appointment has to be made to the CEO of Eskom, and the board of Eskom, which was reappointed, is just getting going. So we hope that with the president's bold steps now, and he also said he was going to appoint a dedicated Minister of Electricity in his office, that all the ministers move in one direction together, and that we see a significant upping of the provision of funding to recapitalize Eskom, which again we'll see in the Minister of Finance's speech, that we see unlocking of the IPP renewable sector and the maintenance and improvement of generation and the power plants.
Do you think there needs to be a government reshuffle to push all of these reforms through quickly?
Well, it's common cause that the president intends and has to reshuffle his cabinet to fill vacancies. This is going to be a critical decision he makes, because we all know big organizations run on people choices. And so the choices he makes now is going to be absolutely critical on the back of his re-election as president of the ruling party. He has the political capital. I think from recent interactions, he has a very strong understanding of the problems. Now it's a question of navigating the political environment to make the right appointments.
What can you tell us about the massive infrastructure drive? How will that help South Africa going forward? And what does it mean for investors maybe wanting to get into there?
Look, I think the investors want to see stable power supply, what we call backbone infrastructure, in particular, given a mining economy and agricultural exports of fruit and vegetables and so on into Europe. They want to know that there is a logistics that works, and that means road, rail, and port networks being able to export product and get that product out. And we have a very strong commodity backdrop, as you know, which is to the benefit of South Africa. So I think if we can get a more stable energy environment and some basic steps happening to stabilize the port infrastructure, with those two steps are going to take giant leaps forward. I think the investors like the story of South Africa. They like the fact that we are a very fluid and liquid capital market. and that they can, they can easily get in and out of their investments. And we have a constitutional and judicial setup that is to the strength, whereas other emerging markets may not be the case. So South Africa is an attractive stock for emerging market investors.
Colin, can I just ask you, something that we touched on in the beginning, with the national state of disaster, does this allow the government to go, more quickly? I guess time is of the essence, or do you worry that this pushes everything back?
No, it will allow them to accelerate activities and to overcome licensing, legislative, and environmental obstacles. And this is one of the reasons why the ruling party was pushing for this. I think there's general appreciation. It's a controversial move. There's some detractors, but I think generally people will say the state of emergency or the state of this intervention will assist in moving things forward. But it's not the only thing, right? So we need to, as we all know, these issues are technical issues, operating issues, financial issues. We need to get, 200 billion rand of debt taken off the government balance sheet. Is that going to happen when the Minister of Finance releases his budget speech on the 22nd of February?
Yeah, that's the next target point. Colin, thank you so much for joining us. Colin Coleman, former Goldman Sachs Chief Executive for Sub-Saharan Africa. Now, coming up, we track some of the notable stocks on the move, including Adidas. The stock tumbled this morning after the giant warned of a possible €700 million loss from the Yeezy fallout. That's next, and this is Bloomberg.
Are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Here are the stocks on the move that we have your eyes on, well, our eyes on, and we have a couple of fun ones. Joe Easton from our equities team. Hi, Joe.
That's right. So we're starting with Stanchart here in the UK, the big M&A news in the banking space. Overnight, we did see FAB, First Abu Dhabi, saying that they are not considering an offer for the UK lender. That stock, you'll remember, rallied yesterday about 11%. And today, we're seeing those shares trimming that by about half. But the stock still remaining up around 5% since yesterday, even after today's 4.3% drop. Some people in the market clearly think that that deal still has legs. It is a very attractive company, given its big Asia footprint, but there could potentially be some regulatory concerns, given it has a US clearinghouse and the Treasury there in the US might have some worries about their China exposure, potentially a stumbling block for that deal. That stock down 4%, as I mentioned. Then I'm going to go on to the fun one today. Not so fun for Adidas shareholders. That stock is dropping this morning after the company warns that it could face a 700 million euro loss following them cutting ties with Kanye West, now known as Ye. So this comes, of course, as they sever that relationship after his anti-Semitic commentary. They're now predicting their sales could drop by a high single-digit % this year. Analysts were looking for those sales to be up 5%, so clearly not one for the gold diggers, if I can squeeze in a cheap pun there on the hip-hop references. They're actually losing a bit of market share anyway to Nike and Lululemon as well, so it's been a pretty bad run for that company at the moment. The final one I'm looking at, I'm moving over to HelloFresh, the meal pack subscription company. That stock dropping today, just bringing it up on the screen there. That stock was down around 7% last time I checked. JP Morgan going underweight for the first time in 2 years. They're worried about people unsubscribing to HelloFresh. The company's not adding enough new clients and may have to really splash out on marketing in order to attract some new people onto that subscription. They're giving it a street low price target of 22 euros. You can see it at 23 euros at the moment, down about 7%, as I say. They've not been passing their cost inflation onto consumers as well, because they're worried that would cause even more people to quit the meal pack product. So HelloFresh getting hit today by that JP Morgan downgrade, down 7% at the moment in Frankfurt.
Joe, thank you so much. Are you a user of HelloFresh?
I was, but I think I was one of the many people that quit when lockdown ended. So, yeah, how about yourself?
There you go. No, I like cooking, so I like to start from scratch with a lot of frustration and nervousness as well.
That's the best way to do it.
But Joe Easton there from our equities team, always on point. Now, this is a picture across the board. When you look at markets, there's one thing that we need to watch out for, and that's yen. The BOJ report really sent yen moves. Report saying that the academic, Kazuo Ueda, will be nominated as chief of the BOJ. He's a surprise. This is according to Nikkei. This Nikkei report also says that the government's favorite, Mr. Amamiya, had actually declined. To be clear, while Ueda appears to have said it's important to continue monetary easing given the current conditions, a lot of analysts are also saying he did not elaborate or make other substantive comments or confirm his nomination. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons in New York, Anna Edwards in London, and this is Bloomberg.
Paul Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people?
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Probably the first reaction of the market is the knee-jerk reaction to whatever the name, which is different from Mr. Mamiya. But Mr. Ogweda has been generally dovish when he was with the BOJ.
There is a perception that he will be more hawkish, and hence we've seen that rally in the yen. And look what happened over the past few months, as we've seen the rally in the yen from the high 140s to 130 or so right now against the dollar.
This will provide a good balance between the fresh eyes and also the deep knowledge about what is the BOJ is all about.
To take positions right now on the back of this is quite risky because it's conjecture.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. A surprise at the Bank of Japan. The yen rises after Prime Minister Fumio Kishida reportedly picks a former BOJ board member to take over at the central bank in April. Russia retaliates. Moscow plans to cut oil production in response to price caps imposed by the West. And shares of Adidas are slumping today. The German sports shoemaker warns of an operating loss after ending its lucrative brand deal with the rapper Ye. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, an incredible lot of news flow coming at us this morning in the early hours here, well, certainly the early hours stateside, just early in the morning here in Europe, getting this reporting. It is still just reporting about succession over at the BOJ. We didn't expect to hear more on this until Valentine's Day.
Yeah, no, but we got a surprise name that really made the story exciting again, not just for traders, but also for economists and policy wonks, right? Because there's this great argument about whether or not he's hawkish or at least not dovish, or maybe he's dovish or at least not hawkish. Take a look at what's going on in the yen right now. You can see the dollar weakening against the yen, so the yen gaining some strength. You can only buy 130.88 yen for $1. Previously, you could buy more than 100 before this news story popped up. And it's, by the way, popped up across a number of different Japanese newspapers. You could buy more than 131 yen for $1. So you have seen that move, and that debate's going to play out throughout the day. If you're excited about central bank policy debates, definitely stay tuned to Bloomberg. We'll be talking about this for the entire day. The Nikkei right now up 31 basis points, or up a third of 1%. So closing higher. At least that news hasn't hurt the stock market. Maybe equity market participants have decided that he isn't hawkish or even is dovish. As I say, you can pick either one from moves he's made in the past, votes he's made at the Bank of Japan, but 20 years ago, or posts that he's made over the last 8 years. A post that he made in July looked relatively dovish. I wanted to put Adani in here, by the way. It has fallen more than 10% at one point, but it's rebounded quite a bit. That's because not only has the MSCI changed the weighting of not only Adani Enterprises, but I believe four in total stocks because of a free float determination. But Adani has hired Wachtell, one of the biggest U.S. law firms, so we could see more drama in this story as well. It could really bring the legal action that's threatened against the short seller that forced Adani's stock prices down and bond prices down so dramatically over the past few weeks. We also see the Hang Seng right now down about 2%. This is interesting because in China we got inflation out at 2.1%, so it's returned, inflation has, as the economy's opened up, but it's still fairly muted, a fairly muted level at 2.1%, especially for the numbers we're used to seeing over the past couple of decades from this economy. They can get so high, and that means there's room for the central bank to continue to act in terms of stimulus to drive the economy up, but it hasn't helped stocks in Hong Kong. In terms of what we're looking at in the U.S. this morning, not a lot of action yet in the S&P futures. We're down about a third of 1%. We're going to get a couple of Fed speakers today, including Patrick Harker, who's talking at a crypto conference on the West Coast, which I think is interesting. Bitcoin, by the way, back down under 22,000 at 21,831. We also see the 10-year yield moving up about 3 basis points. So investors are selling this debt. And then finally, but I should say last but not least, is NYMEX crude. In fact, Brent, I think, an even bigger move to the upside. Right now, a 2.5% gain for West Texas Intermediate to about $80 a barrel after news that the Russians are going to cut production by 500,000 barrels a day. Anna, also another one of the huge stories that I'm sure makes even bigger waves in Europe, where you have indexes much more heavily weighted to the energy complex.
Yeah, absolutely. So the global story that we're focused on from a central banking perspective, as you say, is very much about Japan. But there are plenty of other stories that really are cutting through. And certainly here in Europe, the energy story is one of those then, Matt. Broadly speaking, we see negativity across European equity markets, not quite so much in London as elsewhere. And that's where you see that weighting that, Matt, you were talking about towards energy stocks, which we'll get to in a moment. But broadly speaking, we're catching up with the negativity we saw on Wall Street yesterday. A lot of that driven by a higher rates environment. And we'll be speaking to PIMCO later on this hour about where that heads, because that's important evolution in US policy that we need to keep watching, of course. Let's roll on and show you some of the individual movers that we have contributing here, and Brent crude is one of those. As Matt was pointing out, incredible news flow surrounding this asset as well. The Russians now saying that they are going to cut back on production. We've had this comment before, this now coming from Alexander Novak. We've had these comments before. They've threatened to do this in the past. We'll see what happens here. But clearly this could be a disappointment to the architects of the sanctions arrangement, who had wanted to avoid a situation where Russia cuts back on production. But that's what they're threatening to do right now. 86.50 is where we trade on Brent. These are energy stocks then moving in tandem with that, up by 1.5%. We've got the euro against the dollar here, fairly flat, a little bit of a movement downwards in the euro, down 0.3%. And Standard Chartered is down by 3.7% this morning. This after a strong rally yesterday on speculation, on some reporting around whether First Abu Dhabi Bank might be interested in buying the business. That has been denied this morning, and so the stock retreats, Matt.
Fab. I love. Is it FAB? Do we call it FAB, First Abu Dhabi, or is it just Fab? Can. I like Fab. All right, let's get back to the top story in central banking, as you said, Anna. A surprise at the Bank of Japan. The yen is rising on multiple reports, and these are as yet still unconfirmed reports, that Prime Minister Fumio Kishida will nominate Katsuo Ueda to take over the central bank in April. Geroyd Reedy of Bloomberg Opinion joins us now from Tokyo for the details, and I think, Geroyd, an important point of the story is that Amamiya was not, or at least it's reported, was not interested in taking the job, so now they're going with choice number 2, and he may be less dovish.
Absolutely. I mean, I think we'll have to see why Amamiya did not want the job. It certainly is a curious sort of twist in the tale, given that he certainly appeared to be, obviously he was the, the #1 contender and that most people wanted or expected to see him, I should say. I think the fact that he was approached, according to these reports, and turned it down indicates that the choice of Ueda, who I should say, is quite a surprise, indicates that it might not be as hawkish a tilt as I think the markets first interpreted it as. I think the markets were set up to take anyone who wasn't Amamiya as a sort of a hawkish turn by Kishida turning away from, a decade of Kuroda. But the fact that Amamiya was offered the job but didn't want it would certainly indicate to me, at least, that I think Kishida isn't looking for a huge change in monetary policy.
Is there any sense, Gaurav, that he has been away from central banking for a little while? He's been in academia, and so there is a sense that maybe some fresh thinking is being sought?
I think that would be certainly one way to approach it. Another way might be as a sort of like safe pair of hands. You might think, we'll have to see, what he has to say. The only thing that he has said so far, reporters did catch him earlier on today, and he did say that he thought it was important to continue with the current monetary easing framework. So I certainly don't think he's going to be a radical departure. I think in some sectors of the market, people are set up for a gigantic U-turn or an about face by the Bank of Japan away from easing and towards the sort of tightening that we've seen from other central banks. But personally, I don't think that's on the cards, and I don't think Ueda does either. We saw some of his writing last year where he was saying that he thought there was a lot of danger in premature tightening, and he didn't think it was likely that the Bank of Japan would be able to ease in the current inflationary environment.
All right, Gaurav, so a lot going on here. We're going to continue, obviously, talking about this excitement at the BOJ. Thanks very much for joining us on what is in Tokyo pretty late on a Friday night. Now, oil gaining today after Russia's deputy prime minister said Moscow plans to cut its oil production in March by 500,000 barrels a day in response to the Western price cap. Paul Wallace, Bloomberg Energy and Commodities editor, joins us now for more. So, Paul, how much of a surprise is this cut, and how much does it play into the market action?
Hi, Matt. Well, we certainly had a bit of a reaction in the oil market, and Brent's up today about 2.7% the last time I checked, although it might have softened that rise somewhat. So yes, there are clearly some traders that are a bit surprised by this and that probably didn't see Russia going ahead with any production cuts. But I think it's important to note that Alexander Novak did flag as recently as November or even December that Russia could do this. It's very much in line with his comments back then when he said that Moscow could lower output by 500,000 to 700,000 barrels a day in early 2023. And in his statement today, he said they would cut it by 500,000 barrels. One interesting point which people will really be watching for and trying to find out is whether this is really voluntary, as Alexander Novak says it is, or whether it's been forced on them because they simply cannot find alternative markets to all the fuel and crude that they were previously selling to Europe.
That's a really interesting point, and certainly one that I'm sure our reporting will focus on then, Paul. And worth saying, as you mentioned, that Novak has made these comments in the past. It's certainly not the response that those who designed the price cap wanted to see, although there have been plenty of warnings that this could happen. So who can fill the gap? Can anybody fill the gap? Can OPEC Plus step up? Would they?
OPEC Plus could. They have the capacity there, but the most recent reporting that we've got, including some from earlier this morning before this Russian announcement from OPEC watchers, suggested that the Saudi Arabians were not keen to increase production this year, and they were very much on sort of in hold mode, and that they weren't looking to unwind some of their cuts from late last year until 2024. We'll have to see if today's announcement changes that, but I think it's unlikely that they would have been taken aback by this news because of what Novak was saying late last year. And it was certainly the case case that a lot of oil traders and analysts were seeing a reduction in Russian output this year. It was just a question of how much.
All right, Paul, thanks very much for that reporting. I will say that as you were speaking, we got some headlines crossing from Interfax, which cites the Kremlin in saying that Russia has discussed these oil output cuts with OPEC Plus members, as well as telling Interfax that Vladimir Putin is going to address the Federal Council on February 21st, I guess, regarding these cuts as well and oil production. Now, let's get to some consumer stories that are moving in the markets big time. Adidas warns that it may report an operating loss of as much as $750 million this year. That's after terminating a lucrative branding agreement with the rapper Kanye West, who I guess now is known as just Ye. Joining us now from Berlin is Bloomberg's Oliver Crook. So, Oliver, how much of an impact has this had on Adidas shares?
Can have on a major company like Adidas, down some 10-11% this morning, and it's down, as you say, just to this termination of this partnership, the Yeezy brand that was dissolved in October after he made some anti-Semitic remarks. The Adidas before that point had called it the most successful partnership of its kind in the industry in history. And if you look at, we talked about the operating profit, if you look at the revenue, this could cost Adidas 1.2 billion euros in revenue this coming year. That's the worst case scenario. And these relationships really are the fuel in the tank for a lot of these companies. There's a similar relationship with Beyonce that Adidas has, the Ivy Park brand. But we had reports from the Wall Street Journal overnight that sales from that are down 50% last year. So there's no guarantee, even with one of the most decorated, celebrated artists. We have a new CEO in January. He just took over. He says that they have to put back the pieces together, and they need some time to do so. And it's a tale you see in the stock this morning, but also longer term. If you look at Nike versus Adidas over time, at the beginning of the pandemic, there were $60 billion in market cap difference between these companies. This morning, it's $160 billion.
Ollie, yeah, really fascinating. A really nice example of the risks for your brand of these kind of partnerships. Also some good news, though, and there's what Oliver was just describing in terms of the battle of those two rivals. Sticking with the consumer-facing sector then, Ollie, we also got some numbers, some good numbers coming out of L'Oreal. Bring us up to speed.
Yeah, so sales up 8%, a little bit over 8% in the fourth quarter. That beat analyst estimates, and it's down basically to strength in the United States, despite some severe weakness in China. But the U.S. really, the consumer holding up there. Drastic slowdown, they said, in the luxury sector in China. And looking ahead, we see a little bit more of this coming. The U.S. holding up, the Europe also holding up. But I know we're speaking to the CEO. You're speaking to the CEO a little bit later today. They're saying that there might be a rebound in the second quarter in China after the COVID zero has been rolled back. Shares are down, slightly this morning, about 1.5%, but year to date up about 12%.
Ollie, thanks very much. Bloomberg's Oliver Crook joining us there from Berlin with some of the corporate movers we're keeping an eye on. We will be talking earnings and growth strategy, as Ollie said, with the CEO of L'Oreal. That conversation coming up later this hour. We'll also get back to the bond markets. We'll talk to Geraldine Sundstrom, PIMCO Europe Portfolio Manager. What does she make of the ever-inverting 2s, 10s yield curve in the United States, and what's the impact on Europe? This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. and you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
All right, we have a great chart of the yen action today after it was reported by the Nikkei that Ueda was nominated to lead the Bank of Japan. Amamiya had been reported to lead the Bank of Japan, or approached apparently back on February 6th. And you can see where the yen was trading in regards to the dollar. You could buy 132 yen to the dollar. After this report from the Nikkei news source and from a few other news sources in Japan, that actually Amamiya declined, and Ueda, who is regarded by some as more hawkish, some see him as dovish regarding his past actions. After he was reported, it dropped to 130 yen, the amount that you could buy for $1. So the yen basically strengthening against the US dollar. Joining us now is Ven Rom, Bloomberg Cross Asset Strategist. And Ben, I understand that, you know, one of his votes 20 years ago was considered dovish. Then he wrote some hawkish posts over the past couple of decades until last July when he wrote a dovish post. What do we make of this guy?
Morning, Matt. I think that, you know, it's useful to think of Ueda as a pragmatist more than as a dovish guy or as a hawkish guy. I think is what you can pass from his comments over time is that he really is the man for the hour, and he gets the job done. And he sees policy in the context of the global macroeconomy. So he's not outright hawkish or outright dovish. He's willing to change his policies in step with the economy, in step with what the economy needs. And at this point, parsing his comments from previously, I think it is fair to say that he's the guy for the hour, and he's going to kind of probably do away with curve control, though I do think that he's not going to start raising rates in a hurry.
You don't think he's going to start raising rates in a hurry? I mean, that's what people want to know, isn't it, Ven? From an international perspective, you know, this is one of the remaining G20 countries where we see rates as low as they are, where we see yield curve control, where we see dovish policy. It stands out as quite an outlier in that context. And so the market will be clamoring to understand, in a very up-to-date sense, what he plans to undo in Japanese policy and what he doesn't.
Absolutely, Anna. I think that, you know, the JGB market has become completely dysfunctional now because of the amount that the BOJ has to spend every other day defending the curve control. So I do think that that curve control policy is out of date. Even though Ueda said this morning, reportedly said this morning, that the BOJ's policy, current policy, stands for now. I think for now is the operative part there. I do think that, you know, he's not going to probably come in April and say, you know, in one fell swoop, do away with curve control. I do think that he's going to do that eventually, but he's not going to, at the same time, he's going to acknowledge dysfunctionalities in the market, and he's going to scrap curve control. But is he willing to go beyond that? We don't know yet.
Yeah. Okay. So a lot we still need to ascertain, a lot to hear from him, of course, if he ends up being the appointed candidate. And we've heard this morning from the Japanese government that they plan to stick with Tuesday next week, or the 14th of February, at least, as the announcement date for the BOJ nomination. So we'll see what that delivers. Thanks very much to Ven Ram of the Bloomberg Markets Live team. On the Markets Live blog, they're, of course, all over this story. Plenty to say on the Japanese succession story at the BOJ. They're also all over the OPEC story. And I should say, with that in mind, we've just got some headlines crossing the Bloomberg on that subject. OPEC Plus will not boost supply in reaction to a Russia cut. This, according to OPEC Plus delegates. Our reporters reaching out to them, no doubt, and getting this kind of commentary. So this story moving thick and fast, as is the one at the BOJ. If you want more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Seeds, typically between the time you start and they get out in the farmer's fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
Now keeping you up to date with news from around the world, here's the first word. The death toll in those earthquakes in Turkey and Syria has now risen to more than 20,000 people. Experts fear tens of thousands more people are buried under the rubble. Turkish President Recep Tayyip Erdogan is facing mounting criticism over the country's poor construction record. He's also been criticized for the government's response to the quakes. Russia launched multiple cruise missile attacks on Ukraine early today. Ukraine says the targets were critical infrastructure in several cities. Meanwhile, Germany's Chancellor Olaf Scholz has asked European leaders to deliver German-made tanks to Ukraine as promised. The goal is to have 80 of the Leopard 2 tanks there by the end of March. In China, consumer inflation accelerated last month following the nation's reopening from COVID-0. The consumer price index rose 2.1% from a year earlier. Meanwhile, the producer price index fell 0.8%. Coming up, Geraldine Sundstrom, PIMCO Europe portfolio manager, joins us. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe to 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Mitch Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A surprise at the Bank of Japan. The yen rises after Prime Minister Fumio Kishida reportedly picks a former BOJ board member to take over the central bank in April. Russia retaliates. Moscow plans to cut oil production in response to price caps imposed by the West. And shares of Adidas slumping today. The German sports shoe maker warns of an operating loss after ending its lucrative brand deal with the rapper Ye. I'm Anna Edwards in London with Matt Miller in New York. And Matt, the news coming thick and fast in the shape of the oil markets and also headlines from the BOJ as we look ahead to what could be a weaker session in the U.S.
Yeah, it could be a weaker session in the U.S., but the focus is firmly on the Bank of Japan and really a dramatic succession story that's unraveling there right now. The U.S. dollar is right now weaker against the Japanese yen, so it can buy less than 131 yen. The yen strengthening against the dollar on some news that a new head of the BOJ has been chosen, and some see him as hawkish, others see him as not hawkish, others maybe even dovish. Ueda is the man's name. So we had the yen trading at 132. You could buy 132 yen for a dollar, but it strengthened on this report. The Nikkei closing up 0.3%. Now, earlier I said it was closing, but actually it had closed long ago. I'm so used to thinking of Japanese time from German time since I lived in Berlin for so long. But luckily, one of my trader friends reached out to me. So shout out to Anthony Santos Stefano of Cabrera Capital for righting my wrong, as you so often do. I really appreciate you watching and trading through the night. We also have Adani Green Energy right now falling after news that Moody cut its outlook on Adani Green Energy to negative. Now, there's so much going on with Adani still today after that Hindenburg report a couple of weeks ago. We have the MSCI reducing the free float of at least 4 Adani stocks in its index, or the weighting, I should say, of 4 Adani stocks in its index because it's reduced its determination of the free float. And Adani has hired Wachtell, one of the biggest U.S. law firms, likely to bring that legal action it had promised against Hindenburg. So it'll be interesting to see that go forward. The Hang Seng down 2%, and actually we got inflation out of China, which was a good sign, I guess, that things are picking up after the reopening, the COVID reopening, but it was only 2.1%. So that's relatively muted, and you could see investors bet that there's going to be more stimulus coming from the central bank and central authorities there. So watch this space tomorrow. In terms of what's going on in the U.S., S&P futures now down 0.5%. Of course, the final trading session of the week, and we're going to have at least 2, by my count, Fed speakers today. So watch out for them reminding markets that they want to see rates higher for longer. The 10-year yield right now at 368.83. NYMEX crude, we've been talking about the cut, the Russian cut there, 500,000 barrels a day in production, and OPEC now coming out and saying they're not going to make up for that production cut. So you have continued strength of NYMEX crude, right now $79.94 a barrel for West Texas Intermediate, and of course you're going to see that play throughout the oil complex and Brent as well in just a moment. And then I finally thought I would include Bitcoin here, because even though you have the US dollar actually strengthening, the broader Bloomberg dollar index, weakening, the broader Bloomberg dollar index is weakening. You do have Bitcoin falling as well below 22,000, so it's getting a little bit out of the range it's worked itself into the last few weeks, right now at 21,817. In terms of pre-market movers, there's a lot going on there as well today. So it's not just a mellow Friday. Lyft coming out with profits that disappointed and a warning, and that stock is down by a third in the pre-market this morning. Watch that at the open, and of course watch others like Uber in sympathy. Ford is dropping big in the pre-market, 8.2%, but don't worry, it's just gone ex-dividend. So today is the first day that you can buy Ford shares without the right to last quarter's not only regular cash but also special cash dividend. That's why the drop is there, so it's a bit of a technical move. Coinbase off 2% here after Kraken was told by the SEC that some products it offers were illegal or at least should be treated as securities, and Coinbase had some of those same products. So watch the reaction from Coinbase and the reaction in the shares today. And then PayPal also down about 0.5% right now. Volume growth on PayPal's platform slowed even faster than expected in the final 3 months of last year. It's another sign of faltering consumer spending there and may be a concern. Anna, what do you see in Europe?
Yeah, there's a lot going on in Japan, a lot going on in the bond markets in the United States. There's so much to talk about globally. Here in Europe, we're feeling the effects of the higher rate environment that we saw hitting Wall Street yesterday. So Europe playing catch up, down by 1.2%. One sector that's not in negative territory, though, today is the energy sector. Oil stocks, energy majors on the rise, partly to do with this. Matt just was showing the WTI price almost back up at $80 a barrel. Here's Brent at 86.55, up by 2.5%. And that's after Russia has announced it's going to cut back on its production of oil in response to Western sanctions. Here's the pound at 120.94. A little bit of movement in the pound, but really the macro story here is pretty interesting. Does it tell us anything about other geographies as well? We've seen some resilience in October and November in the GDP data for the UK. So even though December was pretty bad, it meant that we managed to avoid a technical recession. That will, of course, take on a political life of its own, that conversation. Standard Chartered down by 4.8% as First Abu Dhabi Bank denies that they are once again having a look at Standard Chartered and could consider buying the emerging markets focused bank, which was trading heavily to the upside in yesterday's session. Let me just get to another story. I mentioned the oil story out of Russia. Well, this is another Russian story. We've had Russia's central bank. They've picked up where they left off last year by keeping interest rates unchanged, so no change from the central bank in Russia. But crucially, they have signaled that they will consider hikes at forthcoming meetings. So that having a bit of an impact, as you can see, on the ruble, not the market it once was, not played internationally in the same way that it once was, but for whatever, there's the movement that we're seeing on it. Policymakers held their benchmark at 7.5% then, in line with the forecast of all economists surveyed by Bloomberg. So no surprise, but a little bit of movement as a result of that guidance then, Matt.
Not the market it once was, but still dramatic and interesting to watch indeed. Thank you very much for that. Now joining us is Geraldine Sundstrom, PIMCO Europe Portfolio Manager. And Geraldine, great to have you on a day when we have such exciting news from the Bank of Japan. I was listening to our reporter, Valerie Teitel, earlier on Bloomberg Radio say that if Ueda comes in and raises rates, even if you're not dealing with Japan at all, it's still so important to global investors because it's the last anchor, the last, ZERP or NERP anchor that's holding rates down globally, whereas everyone else is already lifting off. What do you think about the possibility of a slightly more hawkish candidate coming in to run the BOJ?
Yes, I think this has been flagged for a little bit. We could see already in swap curves people anticipating the end of the zero interest rates and yield curve control to some extent. So this might just be, the actual fact rather than the rumor. We're still, like you said earlier, trying to figure out this potential new governor and what this exactly means. But probably, this governor will be like any other, having to look at the price of oil, and the impact on inflation expectation. And that's probably the news that is moving markets this morning.
What do you see in terms of the global rates regime, Geraldine? I mean, rising for sure, and bankers from the Fed tell us they want to go higher for longer. That's kind of the message out of the major three central banks in the West. Are they really going to be able to stick to it and beat inflation, or are they going to have to turn tail and run when the economic situation turns down?
Well, there's very much a game of liar's poker in terms of the markets and the central bank, to a point that maybe the Fed has decided to not even emphasize things so much, and let's agree to disagree. There's massive uncertainty in terms of the disinflation path. We know it has started, but how sticky will inflation be around this very critical 4% level to go towards 2%? So it really is going to be a mixture of factors. How resilient is the economy, or maybe we're just fooling ourselves and these are just lags which take a lot longer to bite after reopening when backlog orders are so big. And we find ourselves towards the end of the year with central bank actually cutting interest rates. Or if the economy is indeed resilient and the Fed can cut interest rate and the market will be wrong. So I think at this stage, not betting too hard on this macroeconomic outcome is the way to go, and seek income and carry in portfolio is probably safer.
Okay, yes, where do you go to seek that income and that carry then, Geraldine? I mean, there have been a lot of people talking about the attractions of the bond market since the beginning of this year. Now we see rising rates again, maybe people questioning that a little bit. But where do you see the opportunities?
I think it's stick to things that are fairly safe, that have a bit of spreads in securitized securities or mortgage market, high quality, non-cyclical investment grade. All this part is probably okay, even if we were to have a recession, because it's likely to be pretty mild. And be much more cautious when it comes to higher risk securities, especially given the valuations that we have currently. The market has been very fast at the beginning of this year. It was the insta market of immaculate disinflation. And, you know, this is a path that might be complex to achieve.
Let me ask you about corporate debt then. There have been some who have been a little bit concerned in credit about the way that prices have risen, certainly soaring since the month of October or so, and some concern about whether they offer value anymore, or whether we're going to see the European Central Bank get a little bit nervous about the way that spreads have contracted. What do you expect to see in the corporate sphere?
So certainly the riskier part of the market could be at risk if we were to have an economic slowdown, and also the fact that interest rates are simply higher in absolute terms. The more cyclical part of the economy, the market has been very easy with cyclicals. They think there's no landing. So if there were to be one, there's probably some surprises in terms of this. However, let's say in the mortgage market, where loan to value are in fact pretty low, the unemployment rate is still very low, so there should be some resilience there, and you can earn a healthy spread. So it's really to go in those more secure part of the market, much more investment grade, much more non-cyclical areas that are safe, and not try to stretch too far on the risk spectrum.
Do you expect a surprise out of China, Geraldine? I mean, we've had kind of a lackluster inflation print for the last month, but a reopening there could make a real difference in terms of the European economy, businesses, and, you know, issuance plans.
It's a double-edged sword. Of course, China reopening means more demand globally, and that could renew inflationary pressure globally, and that could be a bit of a headache for central banks. We'll have to see what happens to oil prices. We know they are critical to the formation of inflation expectations among households, and central banks have been very focused on that. So, of course, the news this morning, we've seen, you know, Russia with this cut, the reply by OPEC, more demand from China, especially as mobility increase. This could complicate matters, and in a market that's already priced that inflation will be back down almost to central bank target by the end of this year, could prove wrong. And so that's why, at this juncture, probably also increasing inflation-protected bonds in a portfolio makes sense.
Okay, Geraldine, thanks very much. Geraldine Sundstrom joining us there from PIMCO. Coming up on the programme, we will talk earnings and growth strategy with the CEO of L'Oreal, waiting in the wings for us right now. This is Bloomberg.
Connection lost.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, L'Oreal sales growth has beaten expectations in the fourth quarter, despite some weakness in the China business. Bloomberg's Caroline Conan is near Paris for us with the CEO of L'Oreal. Caroline.
Thank you, Anna, and I'm very happy to be joined, as you say, by Nicolas Hieronymus. He's the CEO, of course, of L'Oreal, the world's biggest cosmetics company in the world. Good morning. We had your overall sales number up 8.1% in the fourth quarter, like-for-like sales. That's beating our estimates, but we're still in this inflationary environment. Are you still seeing consumers pacing out their visits to beauty salons, buying perhaps cheaper skincare products, or do you see some kind of coming back to premium brands?
Well, first of all, thank you for highlighting our results. I have to say that I'm particularly happy in the name of the 87,000 L'Orealians about these results. 38 billion euros, plus 18.5% published numbers, our best since 99. And a growth that is 1.8 times the market. So that's a performance that we are proud of. And this happens in a world, as you rightfully mentioned, which is in a great turmoil in many respects. And inflation is part of these challenges we have to face. Today, the market remained very dynamic. If we look at Q4, whether in Europe, where the market was at plus 12, in North America, where the second half was over plus 7%, we see consumers wanting to indulge in great beauty products. Actually, the market is premiumizing. There are consumers that might go to lower-end products, but we see our own consumers actually investing in quality. It's true in all product categories, and that makes us pretty confident for 23, even though we don't know everything about what's going to happen this year. But the signs are positive.
Do you believe that inflation may have peaked Do you still suffer, or do you think you're still going to suffer in 2023 from inflation of raw materials or transportation, for example?
Well, we see already some of the raw materials costs that are beginning to level off, or some come down, like oil derivatives, silicones. We'll have a carryover on this year of these increases that hit us in 2022. We see transportation costs going down, but then we see energy prices, which affect the cost of glass, going up. So I think 2023 will still be a year where inflation impacts our P&L, but we've shown in 2022 that we could offset this with innovation, new products at a higher price, or even taking some price increases on our most desirable brands, and offsetting part of it to deliver strong growth in top line and in profits.
China is obviously one of your key markets. You had some slowdown, especially in the luxury division, because of COVID restrictions towards the end of last year. How do you see business in China this year?
Well, I'm very bullish and optimistic for China. First of all, in 22, we have to remind that the market was negative, mid-single digit negative, around -0.5. We did +6%, so it's 11 points gap with the market. So great tribute to our Chinese teams. And as the market is reopening, it's very promising. So indeed, as you mentioned, December and the beginning of January were not great because people were sick. But we see the early days of February quite positive in terms of store traffic, sell-out. So I think from Q2 onwards, China should be more of a growth driver in 2023 than it was in 2022.
L'Oréal still has a plant in Russia, near Moscow. You're still selling what you call essential daily products in Russia. What is your long-term strategy in Russia? Is this plant still operating?
Yeah, nothing's changed. We are more than respecting the sanctions imposed on Russia. We've stopped the vast majority of our brands, closed our store, stopped our advertising, but we keep selling a few essential products which allow us to continue to take care of our Russian employees and protect our assets. And at the same time, we continue to invest in supporting our Ukrainian employees. Some of them are here in Paris, but a lot of them are in Ukraine. So that's how we take care of them and take care of the future of the company.
Correct me if I'm wrong, but I believe you had about 2,200 employees in Russia before the war in Ukraine. Is that still the case? Did you have any layoffs there in Russia?
No, we didn't do layoffs. Part of our employees were beauty advisors and that were selling luxury brands. As we stopped the sale of luxury brands, some of these beauty advisors have left the company, but we keep the core of our employees, who are very loyal L'Oréal employees for decades now.
So do you believe there will be a return of investment and growth there after the war, perhaps?
Well, first of all, I hope, the war comes to an end. This is a terrible thing that has happened and hit us and hit the Ukrainian people a year ago. And like everybody, I hope this war comes to an end, and then we'll see what happens in the future. And I hope that this part of the world can go back someday to a more peaceful and normal life.
I want to talk about U.S. customers a little bit. We had U.S. and North America sales up 9.4% compared to plus 8.1% in Europe. Obviously, U.S. customers also benefited from the strong dollar when they were shopping abroad, for example. Do you see this trend to continue?
Well, we always welcome tourists in Europe, and whether they're American or Chinese, because the Chinese might come back at spring or summer and discover some of our brands in France. But overall, we see what's very important is wherever we are, in the US, in India, in Indonesia, and even in China, this appetite for beauty keeps on being confirmed period after period. People are investing in their beauty. They want new products. They want innovations. We are bringing lots of great new products in the beginning of the year. And therefore, we are confident that the beauty market will grow everywhere, including in the USA. And of course, we are determined to continue gaining share on these markets.
You'll continue getting shares on this market. This was Nicolas Hieronimus, the L'Oréal CEO from L'Oréal's headquarters near Paris. Anna?
Caroline, thank you very much. Caroline Conan with the CEO of L'Oreal, as she says, near Paris. Thank you very much to Caroline for bringing us that really interesting interview, covering many geographies. Let's go to Japan now. Joining us now on set, Derek Halpenny, Head of Research for Global Markets, EMEA, and International Securities at MUFG. And I say, good morning to you, Derek. I say let's go to Japan because that's clearly where a lot of the macro news flow has come from. Lots of reporting around Kazuo Ueda about the possibility that he might be nominated by the government as BOJ governor. What do you know about him? What do we know about him and his very up-to-date thoughts on macro policy? Because a lot of the search material you can turn up is quite dated.
It is, and I've spoken to a number of my Japanese colleagues in the bank today, and what I kept hearing back from people I spoke to is that Ueda-san is an academic, he's not political, he's very pragmatic, and he says what he sees. So when you look at the dollar-yen reaction this morning, that to me was a classic example of people pulling materials of comments made by Ueda-san over the years.
Yeah.
And there was something in there for everybody.
Right.
There were hawkish comments, there were dovish comments, and I think there was reactions either way to that.
Yes, and even before you got to that material, if you found those hawkish and dovish comments, maybe we could have seen yen strengthening just on the fact it wasn't the dove that they were expecting, and that raised enough questions to send the yen a little higher.
Exactly. Like, I think first and foremost, okay, it's not Amamiya-san. Therefore, positions that were in the market expecting that were quickly liquidated. And I think that was, the bias was slightly in terms of yen weakness in that view. So that was the very initial response that we've had, which I think is very, very understandable. But I think as we settle, as we start to hear more information, and of course, if it is formally acknowledged that he is the choice, I would say the markets would come back to the idea that he's a good pick. He's got some excellent experience. He was on the investment committee for the GPIF in Japan, the pension fund. There's numerous comments about he was concerned about the time that might come when inflation is higher, and the support for the JGB market from the BOJ might not be there. So he's been focused on that risk. He has the very good experience. And I think he is a credible choice.
So, Derek, I wonder what you think of the yield levels, the rate levels, I should say, now in, the U.S., the U.K., and the EU, and how, those would change if we lost this one anchor of low rates, right? The only major central bank left with a negative rate. If he manages to undo yield curve control and does start to raise rates in the face of inflation, and I realize that's a pretty big if. If he does, though, what happens to the global rate regime?
Well, I think that the first part of answering that question is, of course, to look back to the changes that took place in December. So when we had that surprise announcement of the adjustment in YCC by 25 basis points, there was, of course, a reaction in global bond markets. So the US Treasury 10-year yield jumped by about 8 to 10 basis points. So there would obviously be a reaction. But I think, of course, that was a very big surprise and the markets weren't expecting it. I think you fast forward to today, and I think there's a greater element of change to YCC already incorporated into global yields in Europe and the United States. So to answer your question, I think, of course, there would be a reaction. If it's abandoned completely, I wouldn't expect the BOJ to walk away. I think they would still be very, very active in containing the moves initially. But I think you should, based on the 10-year swap rate, trading 88 basis points today, and the spread historically, we're going to get a jump in yields for sure, possibly to 1%.
Derek, thank you very much. Derek Halpenny of MUFG, thank you very much for joining us. Really fascinating insights into what's going on at the BOJ. We wait for further confirmation over the weekend, perhaps, or on the 14th of February. This is Bloomberg.
along and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site, whereas this we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
Six to 9 months from now, we're going to have put the term disinflation up on the shelf with the term transitory.
A lot of people are looking at 23 as very much a transition year.
You're looking at this data and you're saying the puzzle pieces are not fitting together.
We've got basically a 50-50 chance, we think, of a soft landing versus a mild recession.
We can probably skirt around a recession. If we have one, I don't think it'll be very bad, and I don't think it'll be very long, but my base case is we dodge it altogether.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Almost stayed in bed this morning, Tom.
But you didn't take a lift.
Well, very close. It's just like the snooze before the inflation report. Do you know
It is. It is a snooze fest, but we need to make it productive. There's a lot going on beneath the snooze
We need to make it productive.
That's our job, is to stay with us on this exciting Friday.
Usually saving that pep talk for the moment before we come on air. Good morning. Good morning. From New York City, this is Bloomberg Surveillance with Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down about 0.4%. If you want to move this morning, look to the commodity market. Crude this week is up by 8.5%. The Russians are preparing to cut output. And Tom, as we understand it, according to delegates of OPEC Plus, they won't boost supply in reaction to that Russian cut. So you've got a decent rally this morning in crude.
It's been a story all week here, and it's noodling up from what I think 79 for a cup of coffee. Brent crude up to 86.23. And what's important is not where it is, but it just won't pull back. I mean, it just won't give way. I don't care what the timeline is of the glide path. We're on our way to 90.
Relentless. Do you have to reframe the inflation report next week, Bramo?
Well, this is really one of the big questions, especially if that's going to torpedo any kind of equity momentum. But just to build on this move in oil, what strikes home to me is how much the barrels have not been taken off the market from Russia. How basically all they're doing is losing some of the profits from the cost, but not necessarily selling less. And if that gets taken off, do we get a changed narrative around oil and gas and how that feeds into some of the inflation metrics?
I saw Goldman and Jeff Currier just pushing out that triple-digit crude call.
Yeah.
What, to year end?
Yeah.
Something like that?
Something like that. And a lot of people have been burned again and again in terms of a lack of a rally in oil prices. Could this shift that narrative just a touch?
Should we talk about who's getting burnt right now? Can you bring up the chart? Lift in the pre-market. Brutal.
It's the way it's in the pre-market, a series of
Lift
lower
is
lows.
down 33%. Now, year to date, coming into this stock was flying by about 47%. I think we started the year around 10. And Tom, we're going to do a full round trip by the time we open. If we hold these levels, we'll be back to the 10 kind of level.
It's scale, 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 scale. And this is one of those places where there's two. It's a duopoly. I get it, except we saw this with Uber. I'm going to call it success, and Lyft not. And the answer is, by one publication, 70% of the market is Uber. I don't buy that. I think it's even more.
Is it a winner takes all? situation. I think we reflected on this earlier this week when Uber came out. Used to talk about Netflix that way. Can only one person win the streaming wars? Is that where we're at now with this kind of industry?
This is actually more extreme than a Netflix type of scenario, simply because in order to compete, in order to break in, they have to cut some of the fees, which means that perhaps their margins are going to get cannibalized, which means they can't necessarily invest in some of the advancements and innovation that is necessary to keep taking market share. And this is the concern and the reason why the shares are dropping the most, going back to the IPO.
It's not going to be Theory Friday. We're going to do a lot of good discussion. Elsa Lingo's coming up, and we'll dive into thinking about all this over the weekend into Wednesday's inflation report. But John, I'm going to make it as simple as I can. On the internet, into your really important question about is it a survivor of one, is Michael Mabusian's landmark essays pushing back 12 or 13 years ago. It says in technology, using Ethernet mathematics, it is a survivor of one, like Amazon would be one example.
The stock right now down by about 33%. We'll pick up on that story a little bit later. Equity futures down 0.5% on the S&P. No real drama here. Into the bond market, we look a little something like this. The 10-year close to 370, up 4 basis points. TK, the 2-year, back through 450.
It's right where I want to go. It's the first place I looked this morning. And again, it's like oil nudging up to 86, Brent crude on its way to 87. There you are, 4.51% in the 2-year. Okay, it's boring as we wait for inflation, but you know what? Markets are moving.
The spread between the 2-year versus the 10-year, the inversion of that curve. Lisa, right now, negative 81. What were we yesterday? Negative 85?
85.
Levels we haven't seen for a long, long time.
Yeah, the deepest inversion that we've seen since the early 1980s. What are you saying there's no drama? There's the University of Michigan Sentiment Survey, which we've all been on tenterhooks all week for, at 10 a.m. that's going to be coming out. And this is really, I'm focused on the actual reading. How much does it rebound or not in tandem with lower gasoline prices? But I'm also curious because we're expecting a higher year-ahead outlook for inflation. This, to me, will be interesting, moving in the opposite direction. Have we reached this feeling, peak disinflation talk, peak immaculate disinflation narrative in markets? Today, we also have the European Council meeting in Brussels. They're discussing Ukraine and the European response. There was a lot of drama overnight. We can get into that later. But they're also talking about the response to the U.S. Inflation Reduction Act. And I really am curious to see whether there's any cohesion around some sort of subsidies on their side, some sort of program on their side to compete, or if this is just going to end up being a point of tension for a long time, a talking point. Today, there is a bunch of Fed speak. Fed Governor Chris Waller around 12:30 a.m. and Philadelphia Fed President Patrick Harker. Do they double down on the groupthink, which seems to be what's going on, John, in terms of we've got to go more? Do they push back? What kind of narrative do they give going into that Tuesday report, which is going to be a blockbuster one for not only CPI, but we also get some sort of read, John, on who the potential next leader is of the Bank of Japan?
Lisa, thank you. Let's talk about that potential next leader of the BOJ, a professor and former Bank of Japan board member, Kazuo Ueda. And Tom, as we understand it, according to Mizuho, so I went straight to the local bank research, as I'm sure you did as well. Mizuho say this about him: he's a cautious person, so I'd say he won't take away YCC, yield curve control, all at once. Dropping YCC will be likely his first mission, with the balance of the tightening effect in the real economy and the financial conditions by the proposed deputy governors.
They are data dependent, but different data dependent than we are. There's a cultural overlay here. I've been in the offices of the Bank of Japan. This is not the Eccles building. There's not Bloomberg sitting on the desk. There's a quiet, and the quiet is the slow motion movement that they work at. That's a cultural issue.
I'd go one step further. The government is highly involved, heavily involved in the direction of policy.
Is socialism? Is it some form of theoretical communism that we learned in school without tinges of Leninist Marxist theory? It's a communal approach to economics.
We learned very recently that when they were pulling back on YCC, or at least adjusting the band, Lisa, that apparently that meeting was stopped. And it was stopped so that the government can have a conversation, the government official who was in the meeting, about what was going on. Now, it makes you wonder the kind of process they went through to choose who would lead the BOJ and what it will mean for policy going forward from here.
Honestly, our colleagues over at Bloomberg Opinion put it really well. We're talking about the potential hawkishness of the new Bank of Japan governor, right? But to your point, any hawk on the Bank of Japan is an uber dove anywhere else, and they're going to only move at a glacial pace, if at all.
It's all relative, isn't it? We got some yen strength today. I think we do. Dollar yen, negative 0.5%, just in and around 131. Let's get to Elsa Linios, Global Head of FX Strategy over at RBC. Elsa, can we just start there briefly? The next BOJ head, your thoughts on the recent reports that have come through all of this morning?
Yeah, absolutely. I mean, I think it's been an interesting trade for many since the YCC band was widened in December. Got to be honest, feels like people have overtraded it a little bit. You know, keep getting excited about who it might be, what that might lead to in terms of movement. But as you say, the Bank of Japan moves very slowly. And so I think traders right now weighing up their options. We saw that kind of overbaking of the move. It went dollar yen down, back up again, and now pretty much I'd say close to flat.
Elsa, your academics in mind is simple. There's disinflation, there's deflation, there's inflation, and then there's a cosmic undefinability of reflation. Mr. Kuroda is doing the ultimate reflation experiment. How's it going?
I mean, honestly speaking, it's been a long time and it's hard to see tangible effects. Yes, there is inflation right now in Japan, but we've seen it across the world, global supply chain issues, commodity price effects. And what we see when that fades away is the underlying core inflationary dynamic, which is stronger in some countries than it is in others. And I've got to be honest, I find it hard to imagine a world where the US is in disinflation as we're pricing at the moment, and Japan is seeing aggressive inflation that would require much higher rates. It's not a world that adds up.
So you're basically pushing back against the idea that perhaps next Tuesday is going to be rather explosive because we get both CPI and then we also get the Bank of Japan nominee, and some notes overnight were saying this is going to be explosive, especially for all the pain trade and people that are positioned in different ways. You disagree with that, is that correct?
Look, I think CPI is going to be interesting. There's obviously a huge focus on spot CPI in the US at the moment. The Bank of Japan governor, perhaps less so. You know, for me, the big change going on at the moment is not what's happening in Japan, but what's happened in the rest of the world. The increase in hedging costs for Japanese investors, I know we've discussed it before, that's not gone away. And even if the Fed were to be cutting in the back half of the year, it'll still be very expensive for your average Japanese investor. That's the sea change, not the YCC.
Elsa, how does your world change if we now have where money costs something? Cash has value. The one-year Treasury bill is out where it is. How does that change the foreign exchange world where you can advantageously profit from it?
I think that's a great question, Tom, because we're kind of in an environment where vol seems to be falling across the board. You see it in equity markets and fixed income markets, a little bit more mixed in FX. But it's an environment that is actually conducive to considering not just rate dynamics, but also the level of rates, you know, static yield. And in that context, it's very difficult to imagine we're going to see the dollar collapse like I think a lot of people are forecasting if it remains the highest yielder in G10. You know, it does matter when cash costs something. It costs something to short the currency. You earn something for just holding on to it. It does mean that holding on to a short dollar yen position, unless we see a dramatic fall in interest rates, it's just not going to pay off.
Elsa, just quickly, I just want to finish on Europe, the euro and what's taking place in the energy patch today with crude rallying. There's a piece in the Financial Times this morning, and it's on Pierre Andorran, who I'm sure everyone is aware of, the commodity trader, runs a commodity hedge fund. He says Putin has lost the energy war. Do you agree with that? Is that your working assumption for 2023, given what we're seeing play out this morning?
It's interesting because you actually mentioned the Inflation Reduction Act earlier, and one of the discussions they're having at the European Council today is what the response is going to be. The reality is that structurally cheap gas that Europe used to get is no longer there. And that might not benefit Putin, but it certainly will benefit the US in relative terms. So going forward, this is not a 3-month or 6-month trade, but if you look at it on a 2 to 3 year horizon, there are big incentives for European companies to be investing in the US.
Interesting. Elsa, thank you. As always, Elsa Linios there of RBC, thank you very much. If you're just tuning in, let's run through the price action for you. Equity futures a little bit softer on the S&P 500, negative 0.6%. The curve, 2s versus 10s, the most inversion, the deepest inversion going back to 1981, as Lisa pointed out a little bit earlier. The 2-year versus the 10-year, just off those levels from yesterday, from negative 85, Tom, to negative 81.
That's an interesting tape, to say the least. And again, I'm going to go to oil. I know Julian Lee coming up, $86.
Looking forward to that conversation, Tom. Yeah. Very close to 80 on WTI. That conversation up next.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. A surprise at the Bank of Japan. There are multiple reports that Prime Minister Fumio Kishida will nominate Kazuo Uedea to take over the central bank in April. That led to a jump in the yen. He is a professor and former BOJ board member. Ueda has expressed caution of raising interest rates prematurely. Reportedly, Deputy BOJ Governor Masayoshi Amamiya refused to take the job. In Turkey, 3 survivors were pulled from the rubble today, more than 100 hours after they were trapped by killer earthquakes. Rescuers had worked for more than 3 straight days. Meanwhile, the death toll in both Turkey and Syria has now climbed to 22,000. Russia has launched a number of cruise missile attacks on Ukraine today. Ukraine says the targets were critical infrastructure in several cities. Meanwhile, Germany's Chancellor Olaf Scholz has asked European leaders to deliver German-made tanks to Ukraine as promised. The goal is to have 80 of those Leopard 2 tanks there by the end of March. More revelations about that Chinese balloon that was shot down off the coast of South Carolina. The Biden administration is presenting evidence that the balloon was capable of collecting communication signals and carried an array of surveillance equipment. Bloomberg's learned that Congress has been told some of the components had English language written on them. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday only on Bloomberg.
Let's assume even if Russia doesn't lose any production, 1 million barrels per day more from China, 1 million barrels per day less from the SPR. That's a swing of 2 million barrels per day. I think the market's too focused on Russia. The other two alone can take us to $100.
And read a send there of energy aspects, bullish on crude. Let's get straight to crude right now. Crude rallying up more than 2% on Brent, $86 a barrel on WTI, just short of 80. The latest news that Russia said it will cut oil output by 500,000 barrels a day next month. This is the follow-through we expected. They said they'd do this. The threat to retaliate against Western sanctions, well, here it is. Let's see if it materializes in the next 30 days. OPEC Plus, and I think this is the key point, how will the rest of OPEC Plus respond to their output cut? According to delegates, Lisa, they won't boost supply in reaction to that Russian cut. They're the headlines this morning.
Which is what Russia kind of wants, right? I mean, because essentially the point here is, well, if we aren't necessarily making as much money from what we're exporting, if we cut our production, we'll make the same amount by exporting less simply because the prices will naturally rise.
The crude's been rallying most of this week, Tom, up 8.5% now. on the week. A decent weekly turn. In fact, I think we're on course for the biggest weekly gain of the year so far.
Take the chart back pre-pandemic, $60 a barrel, and then you go down to 20 when Lisa had 2 drums, and she paid for 2 kids' school with that, with the drums in her living room, down to let's print it at $20 per barrel.
Which is then required.
And the important point here, John, is a persistency from $20 a barrel up to $120 was tangible. There was like a real trend to it. We come back to $70 a barrel, and now what?
Well,
and
I think
the answer is 70
Tom,
to 86.
is we're having a supply-side conversation.
Yeah.
And I thought we'd be having a demand-side conversation with China coming back online. So this is unhelpful. Let's put it that way, particularly with China coming back online. And we're all sitting here waiting, Tom, for that demand to show up.
Nice precursor off the Faro Excel spreadsheet to Julian Lee in London, truly expert on the geopolitics and the mathematics and the microeconomics of oil. Julian Lee, John says it there, it's a supply-side dynamic, and also, as Amrita Sen said, a demand-side dynamic of the Pacific Rim coming back on. Which is more predominant right now into 2023?
I think, you know, the immediate impact is perhaps from the supply side, and we've got a number of things that have happened in the last few days that have helped support this rally that we've seen this week. These terrible earthquakes in Turkey have had an impact. They have effectively knocked out the exports from Azerbaijan. That's about 600,000 barrels a day. We don't know how long those are going to be off the market for. There's investigations going on about potential damage to the export terminal for that, which is in southeastern Turkey, quite close to where these earthquakes happened. We've had what looks to be a brief outage of a little bit of production from Kazakhstan that also feeds into the Mediterranean market. So that's tightened that a little bit. We've had a production outage in the North Sea of the biggest field there is underperforming a bit. As Amrita said, we have seen the end of these sales from the Strategic Petroleum Reserve, and it's noticeable that if you look at the US weekly figures, the US has gone from being a big net exporter of oil, as it was for most of last year, to being a net importer now, if you combine crude and refined products together. And then we've got the sort of the opening up of China and the boost to aviation demand that I was talking about in the newsletter yesterday. But you have to counter that to some extent with downward revisions to some of the demand forecasts that had been made elsewhere on the back of fuel switching from natural gas to oil. You know, warm weather in Europe means that hasn't happened to quite the same extent. So that's offsetting that a little bit.
Julian, how does OPEC Plus behave differently, and particularly Riyadh behave differently if we leap over 90? The path from 80 to 100, how does their behavior change at 90?
I'm not sure that it does change very much. I mean, I think that, you know, they've clearly over the last few months been worried about the downside. They've been worried about, you know, Brent around 80 and potentially below. They've been very cautious to protect themselves against that downside. You know, if you look at when oil got up to 120 last year, this was a period of time where they had been lagging behind demand growth with their output increases. The group as a whole, as it still is, was failing to pump as much as their targets allowed because many countries couldn't. And yet, even then, they were very reluctant to allow those countries, Saudi Arabia, the Emirates, to make up the shortfall from others. And so they were clearly much more worried about prices slipping below 80 than they were about them going above 100. And I think that mindset continues.
Which really raises this issue. Why have none of the warnings come to pass of the oil bulls? Why has not China coming back online, an economy that hasn't been as bad as people have expected, in fact, hasn't even contracted the way that people thought, even in the United Kingdom? And then you also are getting supply reductions. Why aren't prices higher?
I think that it's partly that the market is just better supplied than it was. Yes, we haven't had some of the very dire economic forecasts come to pass, but there has been, I think, a significant reduction in demand, particularly in Europe. We've had a relatively mild winter in Europe so far, which means that the pull on natural gas hasn't been as big as people feared it would be, and therefore the need to switch away from natural gas and into burning oil hasn't materialized in the way that many people feared that it would do this winter. And that has helped to keep demand in check to some extent. And plus in China, I mean, yes, we've had the opening, but in many ways, the Chinese economy or Chinese oil demand is structurally quite different to oil demand in the US or in Europe, which is very focused on the transport sector. In China, it's much less so. Transport accounts for a smaller proportion of the country's oil demand. And so as you open cities up and allow people to travel, that doesn't have quite the impact that the same moves would have had if they'd happened in the United States, for example. And Chinese industrial demand for energy and for oil within that didn't take the same sort of hit that transportation demand did.
Hey, Julian, always a clinic with you. Thanks for this morning. Julian Lee there on the commodity
My
market
pleasure.
with crude rallying. Thank you, sir. Brent up by 2.5%, WTI up by 2.5% as well. Check out the bond market in Europe. The German two-year yield, Tom, the highest since 2008. If you compare it to where we were last year, February 10th, negative 33 basis points. That is a 300 basis point move on a German two-year, and it totally tracks what's happened with the depot rate, the ECB, which has also seen a 300 basis point move, Tom.
Off the bottom,
This is just tracking the ECB. More rate hikes to come.
Off the bottom, I got negative 0.66%. John, why is it breaking out? It went up there a couple number of days ago, pulled back, and now we go out to 2.76%. What's the why? Is it
You
German
can focus
inflation?
on the change. You can focus on the change in inflation from 10 to 9, or you can focus on the number. I think you focus on the number, 9. It's a problem.
Well, how much is this also really stemming from oil prices, right? If oil prices go up and you have resilience in the economy, you've got a double whammy. You've got an ECB that's forced to really combat inflation that doesn't come down as much on a headline level, but you also have the strength of other components aside from oil that are going to be driving some of the price increases. So it's a sort of toxic
brew. Is that what you want to call it? Look, I think Torsten Slok of Apollo started the week well with this. He said, are we reintroducing the risks of last year? Reintroducing the risks of 2022 with a better growth profile in the United States, a reopening of China, and maybe the crude issues come back. And I think maybe you get a bit of a scare off the headlines out of Russia this morning.
Which is the reason why some people are talking about a double-dip recession. I think that Tom Tsouras was talking about that. This question around, okay, we've gotten the reprieve, we've gotten a rally. What happens if people kind of have to reset and the strength rejiggers the story that we were looking at the end of last year?
But truly, it's amazing, Tom. I remember the summer of 2014. I think I was over here with you, the summer of 2014 in New York at the time, and President Draghi took rates into negative territory, the ECB, for the first time ever. And since then, for years, the two-year, sub-zero, consistently for years. And then last year,
the distinction with the ECB and their headlines is they set out a calendar. The Fed doesn't do that. I wonder what the 2025 calendar looks like for Lagarde.
Yields climbing this morning, crude rallying, more of that still to come. Live from New York, this is Bloomberg.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Slow start for the equity market this morning. Good morning to you. Equities heading south on the S&P 500, negative by 5 or 6/10% through much of the last couple of hours. On the S&P, heading towards the biggest weekly loss of the year so far. Through Thursday at the close, negative 1.3%. The Nasdaq down by another 1.2%. Keep an eye on that as yields pick up worldwide. In the US, the 2-year, 10-year, 30-year looks like this. Yields higher by anywhere from 4 to 5 basis points. Your 2-year through 450 in the last 24 hours, 452. Over in Germany, similar story, yields higher. Highest yields on a 2-year going back to 2008. And maybe, there's tons of things to blame, but maybe you can blame crude. Crude rallying hard this week, up by more than 8% on WTI. Tom, just short of 80 at 79.86, up by more than 2%. Russia pledging to cut output by 500,000 barrels next month. And according to delegates that we've spoken to here at Bloomberg, OPEC Plus not ready, Tom, to offset those cuts.
Yeah, I'm going to go out to Brent crude. The global price to me is way more important than West Texas. $87 a barrel rounded up moments ago.
Important for the inflation story next week in the United States. Earlier on this morning, we had inflation out of China rising 2.1% year over year, just as China reopens. William Lee of the Milken Institute says this about China. China's post-COVID recovery is the heart of upside risk to consensus forecasts on both global inflation and growth. However, and this is the important line, Tom, China's recovery may not spur a global growth rebound by as much as its past expansions.
It is Friday, and what we're doing is framing, and I get it on finance and economics, John. We're framing out the inflation report on Wednesday. But this is a really, really important conversation to get you ready for your thinking on the weekend of where we're going in 2023. William Lee is chief economist at the Milken Institute with public service to the International Monetary Fund, a tour of duty at Citigroup as well. And we're thrilled that Bill Lee could join us this morning. Bill, your opinion is courageous, narrow, and controversial. You think Wall Street is nuts about the China group think that they're going to come back and we're going to boom. Do you doubt China GDP of 5 or dare I say 6%?
A lot of the Wall Street consensus is looking toward high numbers of China growth rates, and even as high as 6 and 7% with the economic rebound we're about to have. But people are overestimating how hard it is to get the supply side back online, and the fact that the policy in China now is to emphasize domestic demand, domestic consumption. So if people are expecting the export engine of China to be reviving again and pushing up commodity prices, I think that's the wrong place to look. Look to the tourists from China going out. And Tom, we talked about the two Americas. Well, right now in China, there are 3 Chinas. The very rich will be the big tourists, the rising middle class that'll be engaging in some of that behavior. But the bulk of the population is worried about their wealth being caught up in the collapse of the property market, and the fact that their household income is in the doldrums because their youth unemployment rate is so high, their kids are not getting jobs.
I want to do the Bill Lee breakdown here, Bill. As you know, when I go to China, I go deep into China, which is 150 feet past the Mandarin in Hong Kong. I want to go into the way you think about the domestic politics, in that the Wall Street groupthink on China is wrapped around Shanghai and Hong Kong and Beijing, and you have the courage to go across the country. What is the distinction of Central and Western China?
I think one of the things that people have missed is the emphasis by Xi Jinping of wanting to spread growth throughout the country. And the Milken Institute's own study of the best performing cities in China has pointed to Chengdu as being an innovation center out west, a budding innovation center. And Chongqing has become a regional growth center that was supposed to be at the heart of the Belt and Road strategy. Well, the strategy to try to push growth out west is still there, but Western investors are ignoring that. And I think one of the things that we have to keep in mind is that China is more than the Mandarin hotels in Shenzhen, Hong Kong, and Beijing.
You tell him, Bill. You tell him.
Public service announcement.
Bill's been telling me for years.
That was aimed at you.
Bill's been telling me that for years. That's not news.
Hey, Bill, let's put some numbers on what consensus is. You know the function on the Bloomberg ECFC. Type in a country. I've put in China. This is the consensus forecast for 23, 5.1%, a snapback from 3 last year. Looking out to 24, the message seems to be get comfortable with 5% again in 2024. Can you put some numbers on your own forecast here, Bill, as you push back against that consensus 5%?
Well, I think the audience would say, well, who cares about Bill Lee's forecast? So let me go to my old authorities, the IMF. The IMF is very close to consensus almost all the time. But the fact that the IMF is looking to 2 handles and 3 handles out 5 years for China's growth tells you something about the reality of China. The IMF almost never deviates from consensus unless there's a darn good reason to. And I think that's a good evidence to say that we are not going to have the kind of high growth rates we had before, because China's productivity and labor growth rates just aren't there to support the 5, 6, and 7% growth rates we've seen in the past.
Well, there are 2 different points here, Bill, and I'd love you to parse through them. There's the headline number that might be juiced by stimulus by the Chinese government, which we're seeing happen, as well as different types of regulatory policies. And then there is the stimulative effect on the rest of the global economy. Could it be possible for China to get headline numbers that they publish of 5% while also not having a stimulative effect on other economies because of the domestic focus of all of these programs?
Bingo, Lisa. I can almost guarantee you that the next set of numbers coming out of China's GDP will have very spectacular numbers on it, high 5s, 6s, possibly even 7s, because the rebound effect is going to be amplified by the way the numbers are being cooked by forecasters. But I think the reality is that China's policy is one of emphasizing domestic demand, emphasizing investment toward building domestic champions, companies that will be helping China's domestic economy. And so the focus on domestic consumption, especially in services, means that we're not going to see spikes in commodity prices. We're going to be seeing spikes in airline tickets and travel destinations and hotels. And that service sector constraint is something that's still very severe in China because it hasn't been built up as much as it has been in the West. So I think going forward, we should see inflation numbers rise, but in different areas. Even the current numbers that we're citing now, 2% inflation that just got released, most of that was food. If you look at the core inflation numbers, it's about 1%. So where is the spike that we're supposed to be seeing from the rebound? Not here then.
Well, so this is actually positive in terms of the potential ramifications for Europe in particular when it comes to crude prices as China reopens, but it has a pretty negative implication with respect to some of the growth that's being priced in to Germany in particular on the heels of China's reopening. How misplaced are some of those hopes?
I think a lot of them are very misplaced because, again, the policy of China that Xi Jinping announced after the Party Congress is we want to build domestic demand, we want to build domestic consumption. That's not the kind of stuff that makes for a lot of imports of BMWs. Except for the dual China or the tri-China's notion that Tom and I have often talked about, that the very rich will always be importing luxury goods, and BMWs and Mercedes will be part of that story. But the bulk of the Chinese population is still struggling, and struggling even more so more so post-COVID and post the property market collapse. Unless the reforms are put in place to restore the confidence that Chinese people have in the property market as a store of wealth, we're not going to see the consumption burst sustained that we saw in the past. And I think that's something that the Western forecasters have not put in place yet.
Bill, China's leadership does not like being embarrassed. This week, a lot of people think they've been embarrassed. What do you think the consequences of that are?
Well, the balloon industry is going to get a deflating story, I think, ahead of going. But I think one of the things that the Xi Jinping has got to demonstrate is that he's got control over the government. And if you have a couple of stray renegades putting out foreign policy affecting moves like letting balloons go over the world and getting caught doing it, there's going to be some heads to roll.
Bill, let's unpack that just a little bit. The takeaway over the weekend is that none of this happens without the sign-off of the leader of the Communist Party. Are you suggesting that someone within the party did something on a rogue basis, went and did their own thing without his sign-off?
I think you overestimate the ability of the center to control the rest of the government. As you know, there's always some fool out there who's decided to be innovative or to embarrass the leadership because they're at the leading edge of the revolt against the party leadership. Either way, I think one of those stories will be acted upon. We've had scenarios before where the central leadership has been challenged by leaders like Bo Xilai, who was arrested for corruption and just taken out of the picture. What we will see here is, I think, a story that's going to evolve where the person or persons behind the balloon story will never know and will never be heard of from again.
It's the rogue weatherman, Tom. It was the rogue weatherman.
This is serious stuff. This is serious stuff. We talked to Stavridis about this, Admiral Stavridis about this again. And to Billy's point, there's this, I'm as guilty of it as anybody else, juvenile idea that everything starts behind the red doors in Beijing. And to a person, Elizabeth Economy, William Lee, the rest of them, Jonathan Spence, have said, you're nuts. That's not the way it works.
Let me just thank Bill quickly. Bill, wonderful as always, sir. Bill Lee there, of the Milken Institute. Lisa, just to build on that, there was a takeaway over the weekend. Nothing happens. To TK's point, nothing happens without Xi's sign-off. Was that the case this time?
Well, so it's sort of damned if you do, damned if you don't, right? If you didn't have control over this, then you don't have control over someone tinkering in their, in their garage and coming up with a balloon and then sending it over another country. And if you did sign off on it, what was the diplomatic purpose right ahead of what was supposed to be a Tony Blinken meeting that was supposed to be conciliatory? So it's sort of either way a very awkward moment from a messaging standpoint.
And Stavridis' book with Elliot Ackerman, which was my book of the summer a year or two summers ago. It's
with the other 10 books.
No, it's a phenomenal book. And the heart of it is Dr. Lee mentioned there, and this is not funny, these people just disappear. In Stavridis' fiction of 2034 in the back end of the book, people disappear and they don't look like Leonardo DiCaprio. I bust Stavridis' chop. He just wrote it to get a screenplay. Coming to Netflix,
I'm looking forward to that with your other book of the summer.
Well, I got 3 or 4 of them.
I'm aware.
What
was book of the year last year?
Linear Algebra, 4th edition. But I'm serious. This is not funny. I'm going to say, I didn't say it. Dr. Lee said it. People disappear.
I know. It's dreadful. That's what happens under dictatorships, Tom.
Yeah.
It's no joke. Yeah. It is no joke. Greg Staples is coming up, 7:30 Eastern Time. We need to talk about this bond market. He joined us from DWS. Yields are climbing. Equities look challenged in the face of that. Equities are down about 0.6% on the S&P. On the Nasdaq, even lower. Look at that. Yields up through 370 on a 10-year now, higher by 5 basis points. Deutsche Bank. Did you see that, Bramo, this morning?
4.2%.
Yeah, over in the private bank. Hello, 420. On a 10-year, that's what they're looking for.
Bad 30-year auction yesterday. That's the reason why.
Soft?
Yeah.
You're looking at the supply.
I noticed it.
You didn't watch that one, Tom.
Taking a surveillance snap and vet bill woke me up. Look at the 30-year.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Ukraine has stepped up its campaign for more weapons from the West this week. President Volodymyr Zelensky traveled to London, Paris and Brussels seeking help, and the country's deputy prime minister has told Bloomberg that time is running out.
More military assistance is needed, but the major thing is that we need it now. We do not have to have this 2 months time lag because it will be crucial for Ukraine's victory.
She also called on the EU to begin the process for Ukraine to become a member. The death toll from those earthquakes in Turkey and Syria has now risen to more than 22,000. Experts fear tens of thousands more people are buried under the rubble. Turkish President Erdogan is facing mounting criticism over the country's poor construction record. He has also been criticized for the government's response to those quakes. Apple is under less pressure than its tech peers to slash jobs during the current slowdown. That's because it did hire more efficiently in the first place. During the industry's hiring binge, Apple added fewer employees than other big tech firms. On top of that, the company generated far more revenue per new hire than its peers. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
Typically, between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg.
A massive pain trade. You've basically had almost no fund inflows this year. Your cash levels are 5-6%, depending on where you look. Short positions, very, very high, and that's been the sort of gasoline on the fire, if you like, of these sort of less bad fundamentals.
It's been a huge pain trade. That was Ben Laidler there, weighing in on some of this over at eToro. If you think about that pain trade year to date where we have been, it's been pretty brutal for anyone that's been short, let's put it that way. The S&P 500 still higher on the year by about 6.3%, up by about 12 or 13% on the NASDAQ. You can take some more away from that this morning. Let's check out futures together. We're down about 6 or 0.7% on the S&P. You want to play the blame game? Take a look at Treasuries, maybe. Yields up by 5 basis points through 370 again. Blame crude, rallying by 2%, just short of 80 on WTI, advancing on Brent as well as Russia pledges to cut output by 500,000 barrels a day. And reportedly, OPEC isn't ready to step in and offset that. I'd say the earnings season so far wasn't great. And this market was pretty rewarding for the beats and for the misses. Didn't really punish that much. We had some numbers from Evercore this morning from Julian Emanuel. I can share them with you. He said the average stock price rose 0.5% post-results. Companies beating on both the top and bottom line. They call that double beats. This is what they did. Higher by 1.4% on average versus 1% over the 5 years average. And the double misses, miss on the bottom and top line, they were lower by 1.4% on average over the last 5 years. That number's been 2.9.
Yeah,
so
it's a must-read.
So not really punished for the misses.
Exactly.
And rewarded for the beats.
And Julian now really weighing in now as the more numbers come in, as we'll talk to Gina in a moment. And the basic idea here is there's been a multiple expansion. No one guessed that.
Well, and that's exactly the part. I mean, I was also really entranced by this note because he talked about how at the same time that you've got earnings that are downgrades, essentially, you have rising multiples that now have resulted in the lowest equity risk premiums in more than 10 years, to just give you that point.
Right now, Gina Martin Adams is going to join as Chief Equity Strategist for Bloomberg Intelligence. And as we just did with Bill Lee on China, we're going to prepare you for a weekend of thinking about the fractious path forward. I'm going to go to the equity strategist, Gina, Stephen Colbert, and I'm going to look at the growthiness that's out there right now in value. You are cautious, you are value-based, and yet growth is winning right now. Give us the future growthiness that we can find in a value approach.
Well, I think that it has definitely been a confusing market so far this year. In January, we saw the unprofitable companies outperform profitable companies across markets by the most. The single strongest month, one of the single strongest months in the last 20 years. So we absolutely are in a confusing market, but that's already starting to unwind. Through the month of February so far, we're starting to see value pick up a little bit of steam. Some of the big cap growth stocks are hanging on, and I think that's a reflection of the earnings season where they've been very, very good at managing investor expectations and also very good at hitting on the nerve of investors, which is margins. They've all announced cost cuts. To the degree that they announce cost cuts, they're rewarded for that, and that explains the price performance that you've been noting so far this morning. I think we're going to continue to see the market rationalize expectations over the course of February and probably into the spring months, and we'll see some of this froth come out of the market. But let's not be too attentive to what happened in January. It's a 1 month trend. Certainly unprofitable companies won't outperform profitable over the longer run. And we want to be a little bit more rational in our approach going into the rest of 2023 because there still is a lot of uncertainty out there.
Well, let's challenge that conclusion, Gina. Is that down to the bond market? What drives that view?
Yeah, I think it is mostly the bond market, frankly, John. And when we look at the trend in the equity market, it's very clear that what took the wind out of the sails of this unprofitable trade, small cap trade, was very clearly the Fed meeting. And while right after the Fed meeting, the market has been kind of choppy, it's pretty clear that that was a peak point for optimism in the equity market. It's pretty clear that that has resulted in some rational movement in yields as well. You know, the equity market and the bond market have moved in close tandem since the equity market's low in October. The equity market does take a lot of solace from the bond market trend. If the bond yield is falling, the equity market is generally going to celebrate that as a signal that the Fed is going to ease policy. But I think, you know, as much as we criticize the Fed, they have been relatively successful in navigating this overall climate so far this year, especially since this meeting. You know, we criticize the Fed for not doing enough, but the reality is that they are doing something to take that sort of froth out of the equity market and the bond market alike, and are doing a relatively good job at managing expectations for their policy going forward. And they're very clear. Policy is not going to take any kind of reprieve until inflation is very clearly under some degree of control.
Well, Gina, there's a lot to unpack here, and to build on this idea of taking a signal from the bond market, do you think that equities have fully repriced the higher rate expectations since the labor market report last Friday that the bond market clearly has? I mean, you have seen a marked shift in Fed funds rates. Have stocks fully reflected that?
No, I don't think so. I think when you look at the equity market, there are a lot of underlying currents in the equity market, and it's incredibly important at this point in time to talk about the market and its underlying constituents, because the entire market, when you look at the equal weighted S&P 500, it's trading at just 16 times forward earnings. That's not tremendously unreasonable. It should probably be closer to 15 times, but this is, really getting nitpicky for the equity market. The problem in the equity market are the high duration stocks. Because when you look at the entire equity market and you look at it on a market cap adjusted basis, it's trading more like 18 times forward earnings. This is still a concentration of risk in the tech, media, and telecom space, the large cap growth space, that is very vulnerable to interest rate rises. We've been in a period of time over the last year and a half, in which this space has been derating relative to the rest of the market. We've seen a lot of that bubble that developed in the pandemic deflate with rising interest rates, but it's not by any stretch of the imagination over. It takes a long period of time. And you've been in this period on a very short term where these companies have been extremely good, as I already mentioned, at managing investor expectations. So they've been able to create a degree of optimism through announced buybacks, cash deployment strategies, also cost cutting and layoffs to help enable investor confidence once again. So we're going to have a lot of give and take in this space as we see investor expectations sort of come out of this market, investors need to get a little bit more optimistic or a little bit more excited about other opportunities in the S&P 500. But this has been, a 10-year process of getting too overly exuberant on one segment of the market, and we're deflating that now. It's just going to take time.
This was great, Gina. As always, great summary of things. Gina Martin-Adams there of Bloomberg Intelligence on this equity market. This equity market near session lows, down 0.7%, really in response to what we're seeing take place in the bond market and both the commodity market alike. So futures a bit softer, Treasury softer too, yields are higher, crude's rallying. We talked about that 420 call from a little bit earlier from Deutsche Bank. In the private bank, Christian Knowlton, the Global Chief Investment Officer over there, looking for 420 on a 10-year. If we look at where we are right now, on a 10-year, on a 2-year in America, and hopefully we can bring up those in a full screen maybe. We'll go through them together, 2s, 10s, and 30s. Your 10-year right now up 5 basis points, least at a 370. On a 2-year up 3 basis points to 451. We're picking up again. We're picking up again. It's a challenge to the lows we saw in the last month or so.
And it feels like there's not the same kind of conviction in terms of coming in and buying when things get to a certain level. Things are passing through resistance. There's a bigger question around the business results, or the business consequences of money that costs something. And I go back to Lyft, and I wonder how much you see more consolidation, more rationalization in the biggest players at a time when money does cost something, and the risk of not investing enough is that much greater.
Gone are the days of chasing streaming subscribers over Disney Plus. Wasn't that part of this story?
Exactly. So then you start to see the layoffs and the parebacks, and this is a different environment.
And to the growthiness there, and Gina was brilliant mentioning 16 times earnings, and that's this other market. I would note Apple models out pretty much consistently at a 25 earnings belief. And I just did the math off the MEMB screen on the Standard & Poor's 500. Lisa, I did not use the Dow Jones Industrial Average. And on the Standard & Poor's, it's 16.6%, or the 4. The 4 is 7, rounded up, 17%. Amazon, rounded up, Amazon will come back. 17% of the stocks of 500 are 4 stocks.
Yeah.
I mean, it's the weirdest time still.
Well, and how much does that continue to get consolidated simply because of the lack of free money? There also are these potholes, these interesting stories, and I wonder how much we would be talking about these even if money weren't free. And I'm thinking of, for example, Adidas and the $1.3 billion of
Nice,
Yeezys.
Adidas. That wasn't lost on me. It's
Yeah,
nice.
I'm trying. You say Adidas?
Adidas.
Well, you know.
I don't really care.
One of our
Think about anything.
we're here barely styling. One of our staff came in yesterday with like a 1970s Adidas jacket on.
Nice.
It was like,
So they put a price on losing Yeezy.
Well, yeah, and it's big. And they have all these like shrink-wrapped Yeezys.
Yeasty?
Yeasty. Yeah, Yeasty's huge, Tom.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy. David, art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
Six to 9 months from now, we're going to have put the term disinflation up on the shelf with the term transitory.
A lot of people are looking at 23 as very much a transition year.
You're looking at this data and you're saying the puzzle pieces are not fitting together.
We've got basically a 50-50 chance, we think, of a soft landing versus a mild recession.
We can probably skirt around a recession. If we have one, I don't think it'll be very bad, and I don't think it'll be very long, but my base case is we dodge it altogether.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Lisa calling it Mission Get to the Weekend. Thanks for being with us, Lisa. We appreciate it.
It's good, Lisa.
Come on, you guys are going to throw me under the bus. We started at 6 a.m. by saying, let's try to make this productive.
Thanks for arriving and showing up. We appreciate it. Thank you. From New York City, good morning, good morning. With Lisa Abramowitz and Tom Keene, I'm Jonathan Ferro. Futures right now down 0.6%. We've got a rally in the commodity market, a sell-off in the Treasury market. Tom, your 2-year up 3 basis points, your 10-year up 4.
Bond gives me more today. You mentioned the German 2-year going out to a new high off that huge negative interest rate of months and months ago. But there is an adjustment here. The VIX out above 20, 21.77 up a stick on the VIX shows a little bit of the tension there. And I'm going to mention this, John. I don't think we brought this up. You've been remiss on this. Inflation on Wednesday, Valentine's Day, and the next day, retail sales.
Just to make sure you get this right, because this is important. Tuesday is, I had no idea. Tuesday? Just in case you miss it.
Damn, I made the reservation.
Just in case you miss it. Just in case you miss it.
Like so many people are sending him stuff, he can't keep track of the days, you know?
Yeah, if you're just tuning in, apparently Tom receives loads of Valentine's Day gifts.
No, I don't get gifts. They send me emails that are teased by Mrs. Keene.
Like
we thought you'd want to see this. We thought you'd want to see this item.
I don't want to know. I don't want to know. That sounds special. Let's go through the price action. Equity futures are negative. Yields are higher. Crude's rallying. Russia pledging to cut output by 500,000 barrels a day. That's the latest on the crude side of things. If you're wondering whether OPEC Plus is going to step back in, our reporting here at Bloomberg suggesting they won't. Lisa, right now, crude 79.74. We're up by 2%.
Which really goes back to what David Levovitz of JP Morgan said in that intro. Disinflation is the new transitory, and I want to just sit on that for 1 second before going through some of the events today. But how much does oil really shift that narrative of disinflation? If oil prices continue to push higher, and if you don't necessarily get this this really push in economic momentum from China into Europe,
Going to keep pushing out the recession call as well, or bringing it forward off the back of that?
I don't know, because it's such a mushmash, and if I said that I knew, I would be lying. Let's talk about what the events are today, and other people are going to tell what they think is going to happen, who are more qualified than I. 10 a.m., we're going to hear from the 500 people that are polled for the U.S. University of Michigan Sentiment Survey for the month of February. I am curious to see whether it ticks up, and it really does reflect pretty directly where gasoline prices are, and they have been stabilizing. That said, you have seen the potential for a tick up in the year ahead expectation for inflation, because they do tend to give very accurate, to the 0.1% projections of inflation.
You're looking at me for a comment on New Mitch sentiment. I'm not.
I'm going to give you a comment. There's like 5 or 6 data points. I've always been suspect of it, but McKee is right. You look out 5 to 10 years to see if inflation expectations are getting unanchored. The experts are saying no, they're not.
Based on the 600 people they called.
Well, maybe 522. You know, there were. Yeah.
Chairman Powell cared about it.
Right, he cared about it. Right, okay. All right. We're also looking at the European Council, which has been meeting in Brussels. And yes, they're going to be talking about Ukraine, and there have been a number of developments on that front. We're also watching their response, what kind of collective effort they can make to counter the U.S. Inflation Reduction Act. And John, you've brought that up a lot. You know, this could potentially be a real point of tension between the two allies and what that means. Also today, we do get a host of Fed speak, including Fed Governor Chris Waller, Philadelphia Fed President Patrick Harker. Are we going to learn anything from them? Maybe they'll just say the same thing.
Harker's usually, they're both really good.
They're both great.
They're different. They're different. These are not academic wonks. These are guys in the trenches doing legit research and legit business.
This is at a crypto conference, right, in Miami?
Well, there's one that's 12:30 and there's one at 2. I believe so. I will check.
Yeah, I wonder what they're going to talk about.
Yeah. Well, can I mention this as we get started on next week?
It's a crypto conference.
John, the Tuesday inflation report.
It was us. They're going to say that. No,
John, I want you to start large here. The Chic Gold Rosalie roses.
Oh, here we go.
They're preserved roses. Lisa, top ticks, $499. Delivered in a 16-inch cardboard. Yeah, it comes in a fancy gold vase with these preserved roses.
Oh, they like.
I thought we started large.
Like super long shelf life.
Yes, exactly.
So 500.
Yeah, 5 days.
$500.
$499. That's
how many do you get?
It's an ample amount. It's more than a dozen.
It's for interior decorating. It's not for balance.
Yeah, it's like an interior decoration thing. But it's for someone that wants length here instead of what did John spent $189 last year and they died. They died by what, 10 a.m. the next morning?
If they could last another year, that'd be great. I'd put them away and then just bring them back out again.
Along with the
That'd be
Christmas
great.
tree.
No one would notice.
You can depreciate on your taxes.
Thanks for that, Tom. That's a good idea. Barbara Reinhardt joining us now, the head of asset allocation at Voya Investment Management. Barbara, thanks for being with us. We appreciate it.
Thank you.
Are we pushing out that recession call?
We are. So we think that the fall in interest rates that you've seen since October of last year, 58 basis points on the 10-year Treasury, easing of financial conditions pushes out the recession call. We think that it's probably likely to be somewhere around mid-2024 rather than the second half of 2023. Part of it is that when a lot of people are looking for recessions, they don't tend to materialize.
What's so important here is you have the call that our listeners and viewers in America are comfortable with, which is stay in America and trust American multinationals. Why do you push against the international angle now? And what are U.S. multinationals? I'll use Apple as a China proxy, but there's many other names. How are those American multinationals going to react in the coming 3 years?
So let's take this in two parts. You know, international developed equities, they tend to rally against the U.S. If you take a look over the past 15 years, there have been 4 times that there have been substantial outperformance of international versus the U.S. They tend to last on about anywhere between 3 to 6 months. The rally tends to be about 20%, and then it tends to give all of it back. It's not to say that that trend line can't be broken at some point, but it looks like it's starting to stall out. Since January 19th, the U.S. has been outperforming international developed markets, and we think that's probably the beginning of a reassertion of the U.S. outperformance. It's not a consensus call. There have been lots of fund flows going out to European equities, out to developed international, what we call EFA. We do believe that the U.S. probably has a better growth dynamic, in part because the Fed has been one of the earlier central banks to start tightening policy, which means it's also likely to be one of the earlier central banks on exiting their tight monetary policy as well.
So taking it a step further, are you pushing back against this idea that the rally in January was a fluke and has to be completely reversed? Are you actually seeing any sell-offs as an opportunity to buy more?
Well, the rally started actually in October. So the U.S. is up about 15% up off of its low. International developed markets are up about 27%. It was very oversold sentiment. You had sentiment indicators that we like to watch on a daily and weekly basis that were oversold for over 100 days. That's only happened 3 other times in our data series that we go back to the mid-1990s. So you have to appreciate that there was so much pessimism, so much bad news priced in, so much concern that it didn't take much in terms of a fundamental change at the margin for equities to be able to rally violently off of that. It can't continue forever. The easing in financial conditions, the easing that you've seen in bond yields certainly helps for a while, but you do have somewhat of a top on the equity market in terms of multiples. We're using these opportunities. We reallocated back into the U.S. We sold some of our bond positions after they had done extremely well, knowing that it's going to be a tougher slog from here. You can easily go up until we think probably halfway through this year. Part of it is because the inflation comparables, the year-over-year comps, are very easy. We see that probably starting to turn possibly after the June data, which is released in July. That's when the year-over-year comps on inflation, which is what everybody is worried about this year, become a bit more difficult. But between now and then, it's probably likely higher for equities.
She's way too optimistic. I mean, you know.
Not one of Bramo's friends.
Yeah,
I actually think this is fascinating.
Oh, do you?
I actually really enjoy this greatly, and I think
What, as a bear, you enjoy this?
as someone who is skeptical of groupthink, there's so much groupthink now that there's actually going to be some big fall that I kind of like that it's pushing against that. I like the, counter consensus. I appreciate that.
Appreciate that. I appreciate this from Michael Hartner this morning of Bank of America. You're going to love this, Tom. This is great. An English strategist moved back to London with a wife from New York. After 3 years, someone asked the wife, "What's the best thing about living in London?" The wife replied, "Paris." And what's the best thing about stocks in 2023? Bonds. Isn't that great? The best thing about 23 about stocks is bonds. And he puts out this chart. I think Michael Hartner's just tremendous. Michael, why don't you come on this show? I don't know. Anyway, puts out this chart. Best start to the year for 60-40 portfolios since 1991.
Yeah.
Is that going to continue?
Well, it's coming off of an absolutely horrible year, of course, right? So there's likely to be some mean reversion. The problem that you have in the bond market is you still have the Fed acting somewhat aggressively, even though they've had somewhat of a more data dependence. It seems to us as though they're convinced to raise rates at least 2 more times over the course of this year. The bond market is pricing in a big slowdown in growth, but I would say that the inversion on the Treasury curve, while it's a fantastic predictor for recessions, it has a very long lead time on doing so, anywhere between 8 months and 24 months. You've been inverted on the Treasury curve for about 8 months at this point. I don't think that you're going to have a big buying opportunity for bonds probably until you see you're past some of the uneasy or unfavorable comps in inflation, which probably go through October.
So you think it gets tricky around the summer, around July time when you get the June print. David Leibovitz, at the start of this hour, in that highlight reel we put out over at JP Morgan, what did he say? He said that disinflation would go on the shelf with transitory.
Correct. Disinflation is the new transitory.
Do you agree with that?
Yeah, look, I mean, there certainly is a case to be made that a lot of the inflation that you had was transitory after all. Unfortunately, Fed Chairman Powell didn't tell us how long transitory meant. But you've had, a 15-month upleg in inflation. It's unlikely to be able to sustainable at this high as growth is continuing to slow.
We love your thoughts, but the reason we had you on is Voya is with ING of the Netherlands. Mm-hmm. Can you get us tickets to the Vermeer show?
No.
That's why we...
It's impossible.
John, they have sold 200,000 pre-sale tickets to the show of a lifetime in Amsterdam.
How much are these tickets?
I have I think they're reasonable.
Yeah,
I don't think they're like a gouge.
They're something like 38 euros. It's not terribly expensive.
Which is the reason why you can't get them.
200,000 pre-show tickets to an art show of Vermeer.
They had a Vermeer exhibit at the Met, and it was amazing.
Talk about something that's rare. I mean, there's only less than 40 Vermeers in the world.
Yeah,
so
but
you
you're
should get your eyes on them and get
we
to
should
it.
buy art, is that right?
No, I'm not advocating any part of it. That's
put up
not
the
my
bid.
asset allocation.
Reinhardt, visit Chelsea.
Oh, dear.
Barbara, this was great. Thank
Barbara,
you.
thank you so much for having
Thoroughly
me.
enjoyed it. Thank you. Barbara Reinhardt there, Avoya Investment Management. Live from New York, futures lower. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. A surprise at the Bank of Japan. Bloomberg's learned that Prime Minister Fumio Kishida will nominate Kazuo Uedea to take over the central bank in April. That led to a jump in the yen. He is a professor and a former BOJ board member. Uedea has expressed concern over raising interest rates prematurely. Reportedly, Deputy BOJ Governor Masayoshi Amamiya refused to take that job. In Turkey, 3 survivors were pulled from the rubble today, more than 100 hours after they were trapped by the killer earthquakes. Rescuers had worked for more than 3 straight days. Meanwhile, the death toll in Turkey and Syria has now climbed to 22,000. Russia has launched a number of cruise missile attacks on Ukraine today. Ukraine says the targets were critical infrastructure in several cities. Meanwhile, Germany's Chancellor Olaf Scholz has asked European leaders to deliver German-made tanks to Ukraine. As promised, the goal is to have 80 of those Leopard 2 tanks there by the end of March. Russia is retaliating. Moscow plans to cut Russian oil by March production by 500,000 barrels a day, and that's in response to price caps imposed by the West. That is equivalent to about a 5% of January's output. The news sent crude oil prices higher. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're benefiting from a shift of consumer spend from retail, buying stuff when you're home, to actually spend on services. When we look at inflation, about 70% of our drivers are seeing that inflation is playing a factor in terms of their coming to earn money on the Uber platform. So in some ways, inflation may be a tailwind to our supply. Our performance has been really robust, and we think it will continue to be robust.
That was Dara Khosrowshahi there, the Uber CEO. Uber, the big winner this week. Lyft, the big loser. We'll get to that in just a moment. Equity futures right now down 0.6% on the S&P. Yields are higher right the way through this curve. 2s out to 30s. Your 2-year up 3 basis points. Your 10-year up 4. If you're looking at crude, a rally by more than 2% on WTI, just short of 80, 79.67 on WTI. The latest from the Russians is that we're hearing they want to cut output by 500,000 barrels a day next month. The latest from OPEC Plus, according to our reporting here at Bloomberg, delegates associated with that cartel saying they won't offset the cuts, Tom, and ultimately that's behind this move. Mohammed Al-Arian writes in, he's not alone. A lot of people have written in saying, thank you for reminding us, Tom, that it was Tuesday and not Wednesday for Valentine's Day.
Yeah, it's been a huge response.
So he led with a thank you, Mohammed, anytime. Yeah. And then he told us to look at this, and I'm looking at it right now. Just published this week in Project Syndicate, Tom, there is more inflation complexity ahead. Lead paragraph, as US inflation gradually eases, the claim that today's inflationary pressures are the result of a temporary supply shock has re-emerged. He goes on to say, while this thesis may be comforting, it could also encourage dangerous complacency, making an already serious problem much harder, Tom, to solve.
No, it's a transitory idea here. Dr. Al-Arian really right up top in the Project Syndicate article really mentions transitory is back in some way. I think that's a nice way of putting it. It's not the same as the fever that we had, what, a year and a half ago, but it's out there. I thought Michael Darter was really, really elegant on this. And what's interesting is you mentioned Torsten Slok at Apollo out with a note this morning on the 10 reasons why inflation could be a bit of a challenge to get down to that transitory outcome.
He's really led with this idea that maybe it's not a hard landing, it's not a soft landing, it's no landing at all. Well, and I pinged Torsten a message just moments ago and said, Torsten, is that now your base case, a no landing? And he said, yeah. He said this, inflation's going to be sticky, the Fed has more work to do, and more demand destruction is needed. That's the base case now of Torsten Slok at Apollo.
So this is what I was thinking about last night. Is a no landing necessarily wonderful for risk assets, or is it not, right? Or is it basically a transfer of some of the asset price inflation to an economy and really transferring some of the strength to the economy rather than just see the asset price inflation? Because you will see margin compressions and you will see some of the response in the corporate community that might not lift stocks to the same degree.
We don't have the time now to go into that, but it's a really important theory you're bringing up. What I would suggest, John, is this view, this stew, this toxic brew on Friday. And folks, it is Toxic Brew Friday. The answer is it supports nominal GDP, which keeps these companies going.
You'd have to think. Can I give you the cheat answer? Maybe.
Please.
I don't know what happens in absolute terms with equities, but you'd have to think in relative terms tech would really underperform, facing the prospect of higher interest rates from here.
Well, that's exactly it. And a lot of the unprofitable companies that did the best to start the year would actually struggle in this environment. So again, I don't know what a no landing would mean for risk asset performance. It might not be such a clean, direct link from one to the other.
Bad news for Lyft, let's put it that way, right? Companies like that.
Yes.
Getting hammered this morning, Tom, that stock.
Yeah, I don't know what the percent point is. We'll get it up here in a moment. Mandeep Singh joins us now. He's been so generous to join us here as he writes up the Uber-Lyft divide. Mandeep, I've never seen the divide so great. What's the timeline of Lyft to survive if they're going to compete against a successful Uber?
Well, so look, right now they are burning cash, and even in the guidance last night, it was fairly obvious that insurance is becoming a big problem for them. And we didn't hear that from Uber. And I think that just goes to show that being a smaller player in this market, whenever you're running a marketplace, it's a big disadvantage. And I think we heard it from Lyft that they're having issues with supply, insurance, spreading that over their, subscriber base, which is 20 million compared to Uber, which is north of 130 million. And those are the sort of things that come into play in terms of, how long can this go on. But time will tell in terms of, just in terms of how much growth headwind they're going to see.
Mandy, question came up 3 times this morning. Can Lyft be taken out by Uber? Or is there a regulatory issue here where we need a duopoly?
Yeah, I think it's unlikely that Uber will buy Lyft, given Uber has themselves made quite a few acquisitions. In fact, I never understood why they bought this company, Transplace, to expand in freight. Uber's multiple would have been much higher if they didn't have that diversification, especially freight that has no synergy with their core ride-sharing and delivery business. But I think in the case of Lyft, they would need some B2B partnership or something on the delivery side or logistics side, last mile delivery, where it increases the trip frequency and volume, because that is where they're struggling. They can't maintain the supply if they don't have the frequency. And right now their frequency is going way below Uber in terms of the network usage.
So it's difficult for them to cut prices to growth, right? That's basically the takeaway there. What about the lack of investment opportunities for Lyft at a time when they have much less cash flow to play with than Uber?
Yeah, look, I think they can't even think of expanding outside the U.S. or in new geographies or in new categories like delivery. So that time has passed. Now it's about, how can you show that, this business can generate free cash flow. And we're seeing they're struggling because this insurance element came out of nowhere. Now it became like a $350 million drag on the free cash flow last quarter. And it will continue to be the case. So clearly there is an aspect of variable costs going higher for these kind of businesses. You don't have a large subscriber base and you don't have the trip frequency to manage that. And over time, I think Uber may start doing a lot of the insurance themselves. That could help bring down the cost. But if you're a small player, it becomes a big challenge to maintain all these aspects when you're running a marketplace.
Hey, Mandeep, this was great. And you've been phenomenal this week on both Uber and Lyft. So thank you for that. Making us all smarter. Mandeep Singh there of Bloomberg Intelligence. Can we just bring up the stock again of Lyft in the pre-market, getting absolutely hammered? And I just want to frame it in, I think, in a more appropriate way. Yes, it's down about 30%, 32% today. So we're at 11 in the pre-market, okay? We ended 2022, guess where? 11. That's where we ended it. So you've had this massive rally year today, up by 47%. And now we've just taken out all the gains. Just taken out all the gains in the pre-market this morning.
Well, it gives you a sense, too, of how limited a potential bounce back could be. I mean, to talk about the bounce back, Lyft shares were down by 74% in 2022. So this might have been, okay, well, maybe we overestimated how much the decline was. And then it's like, wait a second, not necessarily. That seems to be what's going on in the market.
Well, we've had this massive pain trade, haven't we? Yeah. All this short covering. Boom, we've seen these massive rallies in single names and at the index level as well at the NASDAQ. And then you get this kind of fundamental pushback from the earnings story. And this is what Mislav Matejka was talking about at JP Morgan. He was saying this is all about positioning, this is all about flows, it's all about short covering. Are we going to get that fundamental clarification for the next leg higher, the validation? And he just doesn't think we're going to get it more broadly.
Which really is, you explained this really well about people playing in options with the cash that was being thrown off from.
Well, that was Julian Emanuel of Evercore, yeah.
But to me, I mean, you just wonder how much this froth gets perpetuated by higher rates, not necessarily dampened on the margins before there's some sort of bigger economic consequence.
TK, something to watch.
Yeah, and within all that is the corporate battle here of corporations adjusting. And, I think we way underreport the size of the big banks in America. These things are giant that we talk about every day. And I don't think we talk enough about the separation of Uber and Lyft. You got a run rate off the Bloomberg screen on Uber of 31 billion. You got a run rate of Lyft of 4 billion. And yet we talk Uber Lyft.
Totally.
It's just, these are things that have to be said.
But Tom, don't you think that's a domestic bias? Because Uber's international, but here in the United States, we're used to both. The rest of the world isn't. And doesn't that speak to the difference in the numbers?
Precisely, and you feel that personally in a place like Paris where it's Uber and they can't, the visceral hatred of Uber in Paris is tangible.
Let me guess, we should do some ground research.
Totally, in Paris.
To see
well, I don't know.
100%.
I don't know how they do it in London because London has the best cab service I've ever seen, except every single cab driver's for Arsenal. I've noticed that.
Have you noticed that?
Yeah.
I meet a lot of West Ham fans as well. For those of you that have written in the last 20 minutes or so, I did not say the best thing about London was Paris. I was quoting someone else, okay? The best thing about Paris is London. Let's put it that way.
Think that's going to get you out of the hot seat?
It wasn't me. Equity futures down 0.6 from New York. This is Bloomberg.
YouTube now? Why did you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Equities down in response to higher yields. This is the picture for you on the S&P. Live from New York, this is Bloomberg Surveillance. We're down 0.5% on the S&P 500, down almost 1 full percentage point on the Nasdaq 100, just nibbling away at the year-to-date gain. Helped out by this move in the bond market, yields higher, 2s out to 30s, up by 3 basis points on a 2-year, back through 450, 451 on a 2-year yield. Think about where we were last Friday morning, where we were about 40 basis points lower. On a US 2-year. It's been quite a move. A move in crude as well. WTI very close to 80, 79 to 74, up by 2%. Brent crude through 86 off the back of this announcement from Russia that they're going to be ready to cut output by 500,000 barrels a day from next month. And I think the important response that we've seen this morning, Lisa, which really speaks to the rally, not just today, but perhaps through this week as well, is that OPEC Plus won't respond and offset it.
Right.
That's important news.
That they might actually encourage the lack of supply, either because they see a dearth of demand that perhaps nobody else sees, or because they'd like prices to be a little bit higher. And deciphering the difference will really affect the market and where it places this.
Been a lot higher this week, up more than 8% over the week so far. And I think Julian Lee also pointed to the events in Turkey, the tragic events in Turkey, maybe disrupting some of the oil supply as well.
It's been a horrible story, I've got to be honest. It's just dreadful, and you just wonder why the buildings weren't better structured. I just don't understand.
I look at the aftershocks every morning, and this is the first time I can say it was almost a quiet evening from that northeastern Mediterranean up the broader valley. There was like 5 aftershocks, and they were all under 5.
It's been a shock for everyone who's seen this play out, and our thoughts, of course, with the people in Turkey and everyone affected by it. Just difficult scenes.
Just horrible, and we will keep tracking it. Do you want to just give you a sense? We were talking about Lyft and Uber, just to give you a sense of where we've come and where we're going. The divergence between the two names have been widening dramatically. Today, you can see in the pre-market that Lyft shares, as we've been talking about, down 32%. Uber shares down 3.2%, so much lesser. But take a look year to date at what they have done. And just to give you some perspective, Lyft is down last year 74%, and Uber was down 41%. So already Lyft was underperforming dramatically. Year to date, Lyft is up 47%. Today's decline, as John pointed out, takes out most of that. Uber shares up 43%. So after today's trading, if the prices do hold, John, you're going to end up with Lyft almost flat on the year, maybe up 10%. Okay, that's marginal based on how much they've been fluctuating. Uber still will retain a 40% gain so far this year. So that gap really widening.
The winner takes it all.
That's the theory.
What did Mandeep say earlier this week? You Uber, you don't Lyft.
Yeah.
And we've been trying to figure out all week. Do you Google or do you Bing? Most people Google. Are they going to make us Bing? I think Tom was a showstopper yesterday. You telling me we're going to start using Bing?
People use Bing more than they think. There's stealth Bing usage.
What, they don't realize they're using Bing?
Yes, it's true.
Stop, pause. How do you use Bing more than you realize? Go.
Okay, because on your personal computers, that is the default setting that comes up for search on a lot of the Microsoft computers, the personal computers. So people end up using Bing and they don't realize they're Binging.
Oh, okay.
learn something
I
every
thought
day on
I
this
just
show.
thought on the desktop you just opened Google Chrome and off you went.
Well, that's what people do, but sometimes they get stuck in Bing. And
get
anyway,
stuck in Bing.
Yeah, let's move
Thanks for
on.
that.
Greg Staples is
You've
saying
really read into
save
this,
me.
haven't you? I think that's great. Isn't that great? Just a font of knowledge, as you might say, Tom. More Fed speak on tap today. Lisa's run you through that. We'll hear from Governor Waller and President Harker. Richmond Fed President Thomas Barkin had this to say, adding to the recent hawkish comments, quote, "It shouldn't be a surprise that inflation, while likely past its peak, is still elevated. That, of course, is what makes the case for us to stay the course." Mike McKee and I are going to catch up with Barkin next Tuesday, Tom.
I did not know that.
An
Very
hour
good.
after the CPI
Wonderful.
report. So we'll
Very
get you some
cool.
fresh Fed speak post-CPI live on Bloomberg TV.
And into retail sales the following day, which I believe is a Wednesday.
Is that right?
Yeah, I'm
Are
hearing
you-
about that.
Are you moving the
I'm
reservation
hearing
from
about
Wednesday
that
to
right
Tuesday?
now. Gregory
Okay.
Staples joins us now, head of fixed income North America at DWS Group, and with a very trenchant note, it takes us back to a previous speaker, John Williams. You say this R-star discussion has serious merit, and you really extend out your view because of the neutral rate mystery that we have in 2023.
That's right, Tom. And I'll tell you, it seems like a lot of the dialogue right now is really over whether the peak rate in the next 6 months is 480 to 505 and so forth. And I'm not sure it matters that much whether they do one hike or two hikes. I think the Fed is pushing back against an amplitude higher than that. I think what they're really trying to emphasize in the Fed speak that we're hearing, we heard it from Williams this week, we heard it from Waller, is they want to emphasize the duration of it, not interest rate sensitivity, but how long they're going to stay at that peak rate, whatever number it is. They're pushing back hard against the concept of a pivot, the idea that they're going to have to ease in July or August, and I think they want to make that true, and I think that's what the market's listening to right now, and that's why you're seeing 2 years at 4.5%.
Long term for the financial media is maybe 3 months. What you're suggesting is you've got to extend out your view away from the consensus call. What does DWS suggest you do if you're extending out the Fed dynamics?
Very much our clients are long-term investors. We're not looking for the next tick in the 10-year, and so what we're looking at is not what we'd call terminal peak. We're looking at terminal floor. Where are we in the end of 2024? What level does the Fed get down to and stop?
What level is that?
Well, it was 3. The market was talking about through 3% as recently as a week ago, and with the unemployment number now, they've pushed that up maybe to 3.25. We think it's actually probably more like 3.5, and then you layer in a 75 basis point 2s, 10s, and you're talking about a 10-year that's appropriately more 4.25.
Okay, well, that's exactly where I wanted to go, because this is really one of the biggest shifts that I've seen in the past couple of weeks. Every guest coming on and saying duration's been overbid, and perhaps you want to fade that a little bit, and you're seeing that on the margins. We've got Deutsche Bank on the private bank side coming out with a 4.2% 10-year yield on that treasury. You think it's the same. What's the path to get there? Is it sudden or is it gradual?
I think it's gradual. I think a lot of it is actually really if you're a leveraged 10-year player and you're buying the current 10-year, it was 450, now 470, and you're going to be financing that at the SOFR rate, which is going to be 480 after the March meeting. That's negative carry for a persistent period of time. You can do that if you believe that the 10-year rate is going to go down very quickly and you can get that negative carry back in price appreciation. But if you're looking at several months of holding on to that negative carry instrument, it only makes sense if you see the 10-year moving up to 4% at a minimum.
What does that mean for riskier credit? What does that mean for safer credit? What does that mean for all of these instruments that have been priced off some sort of stability in yields that might not be so stable?
Well, from one perspective, at least, we're seeing volatility come in a lot. The 2022 10-year range was 270 basis points. In 2023, we think it's probably more like 75. I think 3.25 to 4% is the range. So volatility coming down has always been supportive of risk assets. That being said, we've had a very strong rally in January, probably gone a little bit too far, coming from two things. I think its portfolio managers were underpositioned in risk at year end. Plus, we're seeing more economic strength than we expected. The market was expecting a recession to start as soon as January, and it's clear the data's coming in and saying, no, we're actually having a pretty decent January.
There's a philosophical question, though, when you start talking about a terminal rate around 3.5% for a prolonged period of time, of the fate of companies that grew up in an era of free money and rationalization around their business model at a time when people still expect default rates to remain so low. Do you think that people are underestimating the level of defaults, not necessarily later this year, but next year, the year after, if interest rates remain at the place where you expect them to be?
I'm not sure an additional 100 to 200 basis points is really going to crush some business models. Remember, this is the way things were for much of history until we got to the great financial crisis of 2009, 2010. Overall, we're actually still pretty pretty sanguine around credit, and that's one of the reasons why we've been talking recession for, what, 6 months now? And if you haven't battened down the hatches, you should be out of your job, quite frankly.
Let's not take it that far, Greg.
I tend to exaggerate.
Let's rip up the script right now, because Mr. Staples, with his decades of experience...
Do they teach you about the firing squad in the
Yeah,
Senate?
they do.
Yeah.
I've been there. But this is really important, and I allude to this when I ask guys like you about issuance. What's the lemmings over the cliff attitude now of CFOs in a meeting, and they've got to restructure either heavily debted, lightly indebted, forget about Warner Brothers Discovery, which is a train wreck. What do CFOs do here as lemmings over the cliff right now?
I'll tell you what, right now, the window is still open for issuance. I know prices are still high.
Exactly.
But they should be taking advantage of the market right now. The high yield market, we did $8 billion this week of issuance. That was a market that was shut down.
I think our audience doesn't understand this, and the idea is the stuff is actually issued out. What's the dynamic now on issuance of credit dynamic and duration dynamic?
There's an incredible bid. Retail money is flowing into high yield. Institutional money is flowing into high yield. Again, I think it's a repositioning from being way short at year end, but that window can shut fairly quickly.
It was a buyer's market and no one wanted to sell. They're selling now. Are you seeing the leverage start to move? Just in terms of who's got the leverage, the buyers or the sellers right
Absolutely, absolutely. We're seeing, obviously, deals come priced 20, 30 basis points through initial price talk, allocated at 15 or 20%, and then they're breaking 5 or 10 tighter at the break. This is a credit market that's almost a little bit frothy.
Wow, that's a massive change in the last month or so.
Huge.
So when we started this year and everyone said, let's go, let's get ready, juicy yields, where are we a month later? Same story, or has it changed much?
Well, I think people are still looking for 5% yields in the investment grade space, obviously more like 7 or 8 in high yield. So there's still a bid for it, but you were the people who raised lemmings. I think you could completely do a 180-degree turn if you see an S&P go down 5 or 10%.
Do you think this speaks to the rate cut story, that people see this as a once in a generation opportunity to get 5 and just hold on to it for a number of years? Does it speak to that? They just don't think this high rate regime is going to last.
I think for a lot of investors that's true. And I think actually 5% longer term is a pretty good yield. It disappeared probably 2 weeks ago. Now it's coming back with the backup in the 10-year. But it looks pretty attractive long term. I have to think that's true.
Fascinating. Greg Staples, thank you, of DWS Group. Just bringing the bond market alive, Tom.
Thought of this a couple days ago to issuance here. Debt, Apple, 5.1%. Microsoft, 4.2%. Some people would say to a CFO that's irresponsible. You know, Zvi Bodie, Boston University, Fabosi, that's just irresponsible.
Yeah.
I mean, there's just no other way. You know, when are we going to start seeing gajillion-dollar debt issuances here?
Oh, seriously?
Yeah.
I saw Intel this week, 11 billion. Sorry to interrupt, but yeah.
No, it's okay. You can interrupt any time. It's a better conversation than what I'm doing.
Nick Bedingbrough's coming next. You can weigh in. International economist at Wells Fargo. Looking forward to that conversation. Bramo, I think it's really important. Are we starting to see that leverage turn away from it being a buyer's market and back to it being a seller's market?
Exactly. And when you take a look at some of the issuers, I mean, you're going back to the lower-rated consumer-facing industries, Wynn, some of the cruise liners. You know, it raises this question: how much are people levering up the idea, as you put so well, that we're just going to go back to the same low-rate environment we once had?
More still to come. From New York City this morning, where's the markets? Equity futures, negative 0.6%. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Ukraine has stepped up its campaign for more weapons from the West this week. President Volodymyr Zelensky traveled to London, Paris and Brussels seeking help, and the country's deputy prime minister has told Bloomberg that time is running out.
More military assistance is needed, but the major thing is that we need it now. We do not have to have this 2 months time lag, because it will be crucial for Ukraine's victory.
She also called on the EU to begin the process for Ukraine to become a member. Now the death toll from those earthquakes in Turkey and Syria has now risen to more than 22,000. Experts fear tens of thousands more people are buried under the rubble. Turkish President Erdogan is facing mounting criticism over the country's poor construction record. He is also being criticized for the government's response to the quakes. The special counsel investigating Donald Trump and his allies has subpoenaed former Vice President Mike Pence. Former National Security Advisor Robert O'Brien has also been subpoenaed. The special counsel is investigating efforts to overturn the 2020 election. The probe is also looking at the discovery of classified documents at the Trump estate in Florida. The UK avoided a recession last year by the narrowest of margins. Gross domestic product was unchanged in the fourth quarter following a revised 0.2% decline in the previous 3 months. The cost of living crisis and the strikes did hit the British economy back in December. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
China really needs to come to the table, and China's lack of willingness to comprehensively participate and to move in a timely way has really been a roadblock.
That's pretty punchy stuff for Janet Yellen, I've got to say, the US Treasury Secretary on China. Live from New York, here's the price action if you're just tuning in, counting it down to the opening bell, about 1 hour and 44 minutes away. Equity futures negative 0.6%, a softer week, heading towards the biggest weekly loss on the S&P 500 of the year so far. The year is young, I know, but we've had quite a rally to start 2023. Yields were heading lower, and now they're rebounding by 4 basis points. Your 10-year pushing 370. Your 2-year last week was pushing 399. Didn't get there, just short of it. Still above 4%, but this time through 450. That's a big change we need to get used to. Another change potentially going forward, less Russian crude. They're looking to cut output by 500,000 barrels a day. Crude is rallying, close to 80, Tom, 79.70, up 2% this morning.
Story of the weekend, John, that really matters, with Bitcoin going 23,000 down to 21,000 handles. Bitcoin trades all weekend. And I really wonder what's going to happen here off of this Kraken, I hope I'm pronouncing that correctly, Kraken news, and the trenchant idea here. And John, you forced me to watch the World Cup, and I'm looking at it around at the banners are flipping up and down in the banners.
Yeah.
And it says crypto.com was supporting the World Cup. So I looked it up, and right on their website, they're saying you too can make 8.6%.
My goodness.
The FT today on the Kraken mop-up of the last 24 hours has a branding that goes out to 21% return. That's what this is about, and Gensler's finally acting. To be clear, only for American owners.
You know what you might not see in the Super Bowl on Sunday in the commercial breaks? I think you probably won't see, in fact, reportedly you will not see what we saw last year.
Yeah.
Which is just crypto
Bitcoin-a-thon.
commercial after crypto commercial.
Yeah.
What happened to all those celebrities? What happened to, what was it? Was it Matt Damon? It was like,
there's a whole bunch of
the
them.
brave.
Yeah.
What
I
happened
think
to those guys?
didn't Kim Kardashian get fined by the SEC
She did, yes.
for some advertisements of some of the linked coins? There's obviously been a big disinflation with respect to crypto assets.
Well, it's there, but Ken Rogoff, who was the bravest guy, I mean, he got death threats off his book, The Curse of Cash, and he said to me a year ago, he said, when does Gensler go? And the answer's now.
You know what I see a lot of now in America? Sports betting. So many commercials on
We're amateurs at it compared to you guys.
Oh,
you
yes,
guys are
legalized.
relaxed
I mean,
about
I
it.
grew up with it.
Yeah, you grew
It's like
well, explain.
You just got used
Do you
to
bet on the Super Bowl?
I don't bet on the Super Bowl. I'm not into sports betting, but there was a betting office on every single corner. In fact, there was probably 4. I remember when the government tried to do something about it. There were these high-frequency machines you could play. Do you know the fruit machines?
Yeah.
Okay, so they wanted to limit how many fruit machines were in each store because they thought it was problematic. So do you know what the betting firms did? This is going years back, and they've addressed it since. But what the betting firms did was just open another store around the corner so they could get more.
I just remember
machines in.
I once went to an OTB, and I was actually pregnant at the time, and someone just pushed me down to get to the window faster, and it just sort of highlighted the whole experience.
Yeah, I'm just not into it at all.
Anyway, that was the last time that I went to an OTB. That's my contribution.
So you're done with gambling. Good for you.
You guys done?
We're done.
Okay, that was great.
That was the Super Bowl segment.
That was the Super Bowl segment. That's as good as we got. Steve Bagliuca to be with us here for a substantial time in the 8 o'clock hour. Really looking forward to talking to the owner of the Boston Celtics, rumored to be with a interest with the soccer team in England as well. Right now, Nick Benenbrook joins us now. He's international economist at Wells Fargo, but far more is awarded and acclaimed in foreign exchange. Nick, let me start with that one, dovetailing your international economics to your currency expertise. What does the dollar signal right now?
Well, I think we're seeing a last hurrah in terms of some of these interest rate increases. You mentioned the yields in the United States going up, for example, and actually internationally this week, we've seen a whole bunch of rate increases. Australia, Sweden, Mexico surprised yesterday. So I think we're seeing a last little bit of hawkishness, which is just helping the dollar for right now. But we really think that's pretty close. And as we go forward the rest of this year and into 2024, U.S. recession, eventual Federal Reserve rate cuts, we do think the dollar's actually going to revert to a softer trend at some point.
Hey, Nick, that's interesting because a lot of people are starting to talk about, or at least think about, the risk of higher DM terminal rates. Are you pushing back against that?
I think so. I mean, I really, and we're quibbling over quarter basis points, quarter of a point here. But I still think, when you look at, say, supply delivery times, commodities prices, slowing growth, I don't think many of these central banks are that far away. So Federal Reserve, I think the debate is between, let's say, 5.25%, maybe 5.5%, but very unlikely. It's probably between 5% and 5.25%. We're really very close.
So in other words, you're pushing back on this idea that we're going to end up with a stickier and higher inflation for longer and that rates are not going to go down to the levels that they used to be, or at least to 2% in line with the inflation target. Is that correct?
Well, I don't know if I'm pushing back a little bit against it. I do think the peak of inflation is clearly in. We saw that, last year, and a lot of countries were actually starting to see core inflation come down. So I certainly think we're not going to see any further rate increases. And for sure, I think if you were to look at the Federal Reserve, we do believe they're going to, say, for example, ease maybe late this year, maybe early next year. But we do think they'll be easing ahead of the European Central Bank. And once they do go, we think they'll be moving aggressively. The higher they go, the harder they fall. So the Fed, they moved up, to above 5 to 5.25, we think. When they actually start cutting, we think they'll be moving down pretty rapidly as well.
David Leibovitz on this show of JP Morgan came out and said that disinflation is the new transitory. It seems like you disagree. You think that this is something more persistent and has longer legs. What if the Fed is wrong? What is the case that could potentially cause you to change your view?
If the Fed is wrong, then I think we'll still probably, that could see the dollar move a little bit higher, or maybe the dollar's depreciation would be relatively slow. It is a case of, I do think the direction's fairly clear though. Indeed, one of the things we're seeing, I think, is lower inflation, and actually one of the things that we were concerned about last year was global growth, falling into recession. Our global growth forecast for 2023 has improved to 2.0%. It's still not great, but it's a lot better than the 1.6% that I mentioned to you last time, and it was very downbeat. So I think, if inflation doesn't fall as quickly, yes, we could see the dollar not go down as quickly, but I'm still in it's a dangerous word, but I'm still in the idea that this is relatively temporary. I wouldn't call it transitory. And certainly by the end of 2023, we should see inflation rates a whole lot lower, and that should be comfortable enough for most central banks, or some central banks at least, to be lowering interest rates.
Nick, we have been Lagarde-free today, and yet we see a German 2-year moving out to a new high yield. How many degrees of freedom is she losing on a daily basis as she has the choices to move forward into April, May, and June? How constrained is the ECB?
Well, I think they have some flexibility. I mean, the interesting thing about their last announcement was that they were fairly determined in saying we're moving 50 in March and we're going to keep on going until this inflation is under control. And I think the financial markets weren't that impressed. We didn't really see a rise in the euro that day, nor did we see on that day at least a significant rise in bond yields. I don't believe German bond yields. So I think overall, if we're seeing a rise in German bond yields, that I don't think that'd be particularly worrisome to ECB President Lagarde. And again, with respect to that, I know we're talking about being close to a peak. The argument there, or the debate there, is probably whether they go 325 or whether they get to 350. And I don't think they'd be that upset if they had to, move another or wanted to move another 25 basis points, and that was consistent with market pricing.
Nick, my guess is it just built on the stuff we heard from Chairman Powell the day before, when Chairman Powell said the disinflationary process had started. Then straight out of the gate, President Lagarde said that the risks around inflation had become more balanced, not balanced, but more balanced. Would you agree with the assessment from President Lagarde of the ECB on the inflation backdrop?
I would, to some extent. It's probably balanced, and for a whole long period of time, they were talking about inflation risk always being to the upside. I mean, they must be pleased, I think, with the headline inflation in the Eurozone coming down to 8.5%. Again, I think the one thing that is probably concerning European central bankers, and why they're probably not that worried about bond yields rising in Germany, for example, is that if you look at the core rate of inflation and you seasonally adjust it, and you look at it over the last 3 months or 6 months, you're still looking at an annualized rate of inflation in core inflation in between 5 or 6%. So they're not really seeing a reduction in core pressures at this point, which is why I think they're comfortable going to 3.25, 3.5.
Hey, Nick, great to catch up on the ECB, on the Fed, on inflation in both regions. Nick Bannonbrook there of Wells Fargo. The Italian 10-year, yields rising today by 8 or 9 basis points to 420, but 420, I guess, not seen as a major problem, Lisa, at the moment for this ECB.
There hasn't been a massive sell-off in the periphery, even though you have seen this move up in the 2-year yield in Germany. And this, I think, is giving the green light to the ECB.
The Italians might feel differently because the 10-year was at 140 at the 1st of March 12 months ago.
2-year German yields were at, 0 or negative.
You're missing the lead.
What's that, TK?
Hotel Metropole's opening in Venice.
Oh, here we go. That's nice. Did
Should
you
we
get
check
the
it out?
notification?
Got a notification.
Paris, then Venice. What else you got on this trip?
Just Venice.
Nice.
Some roses.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot.